me try again.
Okay, now? Yeah,
There we
now
go.
it's recording.
There we go.
Okay, so let's get started. So you know the basic smart money stuff, right? Like what imbalances, liquidity, order blocks and stuff, yeah?
Yeah, all that good
Yeah.
stuff. Yeah.
Okay, so now let's start with this. Okay, now, do you know about the strong highs and the strong lows and the weak highs and the weak lows, yeah?
Yep.
Yeah, now it's like this. Okay, because it will be very important for what we do. Okay, now a strong high is a high that takes out liquidity and breaks structure. That's it. Okay, it has to do a run on stops, and then it has to give you a breakout structure. Okay, now this formation will be very important. Okay, this will be very important because this is pretty much what we're gonna use for directional bias, for entries, and a lot of stuff. Okay, now I'll show you how to do that. So this will be a strong high, and then this will be a strong low. Okay, it has to do a run on stops, and then it has to give you a breakout structure. That's it. Okay, because yeah, now I'll just draw this out to you, and later let's get into charts. Okay, now I'll see if you can make sense. Okay, now this is a strong low and this is a strong high. Okay, now what happens in the market is something like this. So let's say now we had a strong high. Okay, price might retrace and give you another breakout structure like this. Okay, might give you another breakout structure. So now you can clearly see price is in a downtrend, right? Price is in a
Yep.
downtrend, creating lower highs and lower lows. So now, if someone wants to re-enter the market, what would they expect? They would expect a lower high and a lower low, right? This is what anyone would expect. So first of all, smart money traders, what would they do? They might look for an order block or something from this area, set their limits here, stop loss above that high, targeting lower prices, right?
Yep.
This is what the smart money traders would do. This is what smart money traders would do. But then again, not only smart money, even supply and demand traders would do the same thing. Okay, might set their limits here, or they might wait until price gets here, and then they'll sell it, stop loss once again above that high. Okay, but then not only smart money and supply and demand wants to enter the market here. Okay, we have trend line traders. Okay, trend line traders. What they would do is they will wait until price gets here, and then they will sell this thing. So once again, they'll do this, stop loss above that high, targeting low prices. Okay, this is what the trend line traders would do. And not only them, who else? We have break and retest traders. Okay, break and retest traders. What they would do is once they find out a bearish engulfing candle, that is what they use as a confirmation. You'd have seen that. So once they get that bearish engulfing candle, they'll sell it, stop loss above that high once again, targeting lower prices. Okay, and then this is what we call a flip zone. This is SNR liquidity, a broken support turning into resistance. See that? A broken support turning into resistance. So they will do the same thing. Once they find out a bearish engulfing candle, they sell it, stop loss above that high, targeting low prices. Okay, and
Kind of a
then we
breakthrough,
have,
right?
yeah. Okay, now this is a breaker too. Okay, now this is a breaker too. So keep in mind the one that comes into the breaker. Okay, now I'll tell you what's going on behind that. Okay, and then we have breakout traders. Okay, breakout traders, because why? If price breaks structure, if it retraces and gives you another breakout structure, the breakout traders will have their buy stops above this high. Okay, buy stops above this high, because in case if something like this happens, it's a breakout structure, right? It's a breakout structure, so they'll have their buy stops above this high, because if this happens, they will expect moves like this. So yeah, they want, since they want an early entry, they'll have their buy stops above this high. Now we know that liquidity is what drives the market, and we know 90% of the retail traders are losing money in the market, right? They're losing money in the market. So now where are the 90% of the traders present in this market? Right above that high. See that? Right above this high. So as a smart money trader, if you do something like this with your stop loss above that high, you're doing the same thing as a retail trader.
Retail. Yeah.
See that? Okay, so now it doesn't make sense for you to do that right now. Only the approach is different. All the others are entering here too, but you're just entering off an order block and calling it smart money. That's it. And you'll get stopped out, obviously. Okay, so you can't do that. If you are a smart money trader, you have to be thinking like the smart money entities. Okay, what are the intentions of the smart money? It's to take out the retail traders. Obviously, it's to take out the retail traders. So where are the retail stop losses? Right above that high. Okay, so what we are going to do is we're not going to look for anything around here. We're going to look for something above that. Okay, we're going to look for something above that. And then again, now this could be anything. Okay, this could be, now the reason I'm referring to this as a point of interest is because now this doesn't have to be an order block all the time. Okay, this could be an order block, maybe a breaker block, or as an imbalanced close price action. Okay, the IPA, this could be anything. But what makes it high probable is the liquidity that is resting right below that. Okay, so keep in mind, this high right here was formed on purpose just to feed liquidity into this point of interest. Okay, see now, the stop losses are fed into this point of interest. Okay, all these stop losses are fed into this point of interest. So this right here was formed on purpose. That is what we can say. Okay, so this is what we call a right inducement. Okay, this is what we call an inducement. Why? Okay, why is this an inducement? Now, people are induced into believing that this right here is a breakout structure point, right? People are induced into believing that this is a breakout structure point. Now, once we get into trading ranges, you'll understand why this is not a breakout structure. Okay, this is not a breakout structure point. So let's say we had a point of interest here. Now, what are the smart money traders being taught? So if they really do not want to get a re-entry here, like right away, they will wait until price gets here and then a lower time frame breakout structure like this. Okay, people will wait for a lower time frame breakout structure when price mitigates this point of interest. So you might even get that lower time frame breakout structure when price comes here. Okay, then what people would do is they will increase their risk and then reduce their stop loss on some lower time frame point of interest, right? Like this, because that way they can increase their risk to reward ratio. Okay, having the same targets. So now this is what people would do. Okay, this is what people would do. So once they get that breakout structure, they'll get all hyped up. Okay, now the trade is gonna work out. Okay, they'll think the trade is going to work out. And then again, some people might look at this as a trend line for me. Okay, now this is not actually the proper way to use trend lines, but this is what you get taught on YouTube. Okay, if you have 3 touches, if you have 2 touches, wait for the 3rd touch, sell it. Okay, that is what you get taught on YouTube. Then once again, trend line traders are getting into like this. Okay, so this right here is engineered liquidity. Okay, this is engineered liquidity. Look at all of this liquidity getting built up. All types of traders. Okay, now all types of traders are getting in, and then comes the manipulation. Bam. Okay, this will be a very quick move because you've seen manipulations before, right? Like it just consolidates and all of a sudden it just wicks and it drops. Okay, so this is pretty much what happens. Okay, now price will shoot up and then we'll kick out everyone that wanted to sell here. Okay, we'll take out everyone that wanted to sell here. And keep in mind, if they want to go lower, they will induce sellers into the market first. Okay, if they want to go lower, I'm sorry, they will induce buyers into the market first. Okay, if they want to go lower, they will induce buyers into the market first. Because why? Only if someone buys, they are going to have their stop loss below or low, right? Only if someone buys, it will happen. So now what happens? Buyers are induced into the market in the form of buy stops. See, buy stops are activated, and then another set of traders might have taken this as a breakout structure, right? They would have taken this as a breakout structure, and what are they expecting? Might look for order blocks or something from these areas now. And then they will expect a retracement and an expansion like this. Okay, they're expecting moves like this. Some people might draw their Fibonacci's like this, the golden ratio, 78.6, and all of that stuff. But what are they going to do? Okay, now, what did the institutions or what did this algorithm really do? Why did they give you this false breakout structure? So when this false breakout structure is given, now where are the stop losses? That is what you should understand. Where are the stop losses now? Right below this low. See that? Right below this low. Okay, so with this false breakout structure, what they really did was they created a cause for lower prices. Now they have a reason to run below this low, right? Because there are existing buyers in the market. Okay, stop losses of the buyers in the market. Okay, so this is that entry you should always focus on getting. Entry above all of this liquidity. Okay, entry above the liquidity, and your stop loss could be above the strong high. Okay, or else if you do not like the risk to reward ratio, you can have it above your point of interest, and then you're targeting this low right here. Okay, you're targeting this low right here. Now this move will be super quick. It will shoot down, and in these areas you might get reactions. Why? Only to hype you up. Okay, only to hype you up. Okay, so once again, when price gets here, you will get this on a lower time frame. Okay, so then everyone will be like, okay, now the trade is confirmed, so let's buy it here. Change of character, buy it. Okay, and then bam, it will just wick below everything. Okay, now then people have no idea what's going on. Then they'll think smart money doesn't work anymore. No, smart money works. You have to know where the liquidity is. That's the main thing. Okay, so this is what happens. Even smart money traders, look how helpless they are. Wanted to sell here, stopped out. Wanted to buy here, stopped out. Okay, even after confirmations. Okay, they have no idea what's going on. No idea. Okay, but this is what's really going on behind the curtains. All they do is they build up liquidity. They build up enough liquidity, and then they do this. Okay, and then they will just wick all over the place. Okay, so this is that entry you should always focus on getting. Okay, because it's like this. Liquidity is what drives the market. Okay, so think of liquidity like a magnet. Okay, think of liquidity like a magnet and price like a little paperclip. Okay, so what happens? It will just draw towards the magnet, right? Because it's metal. Okay, it will just draw towards the magnet. So same thing. You have to always keep in mind, where is the liquidity, or where is that magnet? That is the draw on liquidity. Okay, so liquidity combined with proper market structure, okay, that is the killer combination. Okay, so yeah. So when price broke above this high, all of the stop losses are taken out. So the magnet comes from here to here now. Okay, to here. And then price just goes towards that. Okay, so it's just a game of like dodging their all you have to do is just dodge their moves. Okay, dodge their traps. That's it. Okay, so this is what goes on in the market. Now I will show you a lot of examples. Okay, now I just want to see if you like really got this thing. Okay, so you understood it, right? I hope it's clear. Yeah,
perfect. Yeah.
Okay, so this right here would be one example, and then price can do something like this too. Okay, so in that first example, I told you, do not look for anything around here, but look for something above that. Okay, that's what I told you. That's what I told you. But then again, okay, you have to always pay attention to how price is pulling back towards your point of interest. Okay, you have to always, you have to pay attention to how price is pulling back towards a point of interest, because what if on their way up, they're moving with compression. Okay, they're moving with compression, and let's say you had liquidity getting built up right below this point of interest. Okay, so now I said a high probable point of interest will have liquidity resting below it. Okay, we'll have liquidity resting below it. So now look at this. This liquidity is resting below this, and this liquidity is resting below this. Okay, so now, now it gets a little tricky. Okay, it gets a little tricky because now what's gonna happen? Okay, we don't know. Okay, we don't know now. Both of them are high probable. Both of them are high probable because see, liquidity right below this. Okay, so personally, what I would do is, now we know trading is all about taking a risk, right? It's about taking a risk, but on you have to risk your money on high probable setups. Okay, not just every setup. So for me, this right here would be high probable because of this liquidity. Okay, because of this liquidity. So what I would do is, okay, now if I'm now I don't risk 1% on any setup, but yeah, if I'm risking 1%, for example, I would only risk around 0.225% on this. Okay, because why? There's a huge potential of price still going higher, right, into these areas. Okay, sure. So yeah, what I would do is I'll be selling it here, and as soon as price starts to give me a reaction, I'll move it to break even. Okay, I'll move it to break even because a break even is better than a loss, right? Always. Yeah. Okay, so yeah, I'll move it to break even, and then I'm gonna monitor this counter trend. Okay, I'm gonna monitor this counter trend and see what reaction is price giving me when price comes here. Because what if it comes here and gives a bullish breakout structure? Then we can expect a move like this, right? Yeah. Then we can expect a move like this. But if it fails to react off any of these points in here, then you can expect lower prices like this. Okay, so personally, what I would do is I will risk my money here, because what if you completely ignore this liquidity and think, okay, now this is an inducement too. So what if this, what if price takes out this, and what if price really does this and falls? You're missing out a good move. Okay, you're missing out a good move. So that's the thing. Okay, it's about like risking your money properly. Okay, so that risk management is key. Okay, risk management is key. So like personally, I will be risking my money on that setup. Okay, I will be risking my money here. Okay, so you understood it, right? Yeah.
Yep. Perfect.
Okay.
Perfect.
Because now price can do one of these two things. It can come up, give you a false reaction once again, and then build up more liquidity like we talked about in that previous example, and then do this. That can happen too. Okay, that can happen too. But what if this did not happen, if just melt? Okay, you're missing out a good move. Yeah. Okay, you're missing out a good move. Okay, so that is what we're gonna do. Okay, so in case now these patterns aren't really necessary, I'm just showing you what happens in the market. Okay, so really this is not necessary. All you have to do is just see if liquidity is getting built up, scroll to the left, look for a point of interest, and then you can sell it. Okay, you can sell it. Yeah. Okay, you can do something like this. But yeah, the major thing that you should focus on is the liquidity. Okay, it's the liquidity. So this will be the second example. Can you understand that? Yeah.
Yeah, perfect.
Okay. So same thing in a bullish market. So let's say we have a strong low. Okay, so we have a stop hunt. We have a breakout structure. Retraced and gave you another breakout structure right here. Okay, so now you can see prices in an uptrend, right? Creating higher highs and higher lows. It's creating higher highs and higher lows. So what would everyone expect? They would expect a higher low and a higher high, right? This is what anyone would expect. Okay, even the smart money traders. So what they would do is they might look for order blocks from these areas, might call this their supply and demand zones. They'll buy it, stop loss below the low, targeting high prices. Okay, this is what smart money traders would do. Even supply and demand traders would do the same thing like this. Okay, they'll do the same thing. Might call this a drop base and a rally. Okay, so might call this their base, might call this their demand, set their limits here, stop loss below that low. But then not only smart money and supply and demand wants to enter the market. Here we have trend lines. Okay, trend line traders will be expecting a move into the trend line. And when price comes here, they'll buy it, stop loss below the low, targeting higher prices. This is what the trend line traders would do. And then we have break and retest traders. Okay, we have break and then retest traders. Okay, so what they would do is once they find out a bullish engulfing candle, that is what they use for confirmation, they'll buy it, stop loss below the previous low, targeting higher prices. Same thing with the SNR liquidity. Okay, the ones that are using support and resistance, a broken resistance turning into support, bullish engulfing, buy it, stop loss below the low, targeting higher prices. Okay, targeting higher prices. And then we have who else? We have breakout traders, because why? If price breaks structure, if it retraces and gives you another breakout structure, they'll have their sell stops below that low. Okay, sell stops below that low. Now, where are the retail stop losses? Right below that low, right? The retail stop losses are right below that low. Look at all of this liquidity. Okay, because it's not only you and me that trades in the market. There's a lot. Okay, because now smart money is not a new concept. Actually, smart money is the new retail. Okay, now there are people who know what a trend line is, or who do not know what a trend line is, but they know what an order block is because it's that famous. Okay, it's that famous. So you have to always know that smart money isn't the holy grail. Okay, smart money, the way people use it is, no, it's not that worth it. Okay, it is not that efficient.
Sure.
Okay, you have to always know where the liquidity is. That's the main thing. So we will use this as an inducement, and then we're going to look for something below that. Okay, now this could be anything from an order block to a breaker block or as an imbalance close price action. Okay, but what makes it high probable is the liquidity that is resting right above that. Okay, that is what makes it high probable. So let's say you had a point of interest here and another one here. Now price might come down and you might get reactions. Why? Only to hype you up, like I told you. You might get this on a lower time frame, change of character as a breakout structure. Okay, so people think, okay, now we got price mitigated into this, you got a breakout structure, so let's start buying this thing with increased risk. Now they're going all over this thing. Okay, they'll buy this, stop loss below this low, having that same targets for to maximize their risk to reward ratio. Okay, so they will do this. Some people will look at this as trend lines. Okay, they'll look at it like this. The price might come down and give you good reactions. Okay, might respect all of these areas for a while. Why? Getting more and more people to jump in. The ones that has FOMO and stuff, they'll buy it. Okay, they'll buy it, stop loss below that low, because they know that this is their target. Okay, now buyers are all over the market. And then what happens? Okay, all of a sudden comes the manipulation. Bam. Okay, it will shoot down. It will shoot down. Yeah. And then it will take out all of these buyers. Okay, all of the buyers, that the people that wanted to buy from buy after the breakout structure, even they are getting taken out. Okay, they have no idea why, because even after getting the confirmation, you're getting stopped out. Okay, but and then what happened? Sellers are induced into the market in the form of sell stops. See that? Sell stops are activated. So now what can we expect? Okay, now why would they do that? Because only if someone sells, they're going to have their stop loss above a high, right? Only if someone sells, they'll have their stop loss above a high. So now they have induced sellers into the market in the form of sell stops, gave you this false breakout structure. So then now people will expect retracements and an expansion to the downside, because they would have looked at this as a breakout structure. So now they're looking for order blocks from these areas. They'll set their limits here, stop losses above these highs. Okay, or as supply and demand traders would do the same thing. Some people might draw their Fibonacci's like this, expecting a retracement into the golden ratio, sell it, stop loss above that high. Okay, so where are the stop losses now? Right above that high. Okay,
Yeah.
right above that high. So what they really did was, with this false breakout structure, they created a cause for higher prices. Okay, they created a cause for higher prices. Now, price might shoot up, and in these areas might slow down for a while. Why? Inducements once again. Okay, inducements, getting more and more people to enter this market. Okay, more and more people are getting in, and then bam. Okay, it'll just go outside of that, yeah, trade in range, or is outside of that high. So this is that entry we should always focus on getting. Okay, entry below the liquidity, entry below all of this liquidity. When all of these retail traders are getting in, I'm sorry, getting out, that is where you're entering the market. Okay, so wherever the other traders are placing their stop loss at, that is where you are entering the market. Okay, so yeah, the safe place for your stop loss is always below the strong low. Okay, that is the safest place to have your stop loss. Or else, if you do not like the risk to reward ratio, you can have it below the point of interest. Now, this is what I would personally do, and then targeting this high itself. Okay, so yeah, this is how liquidity gets built up and it gets taken out. Liquidity gets built up and it gets taken out. Okay, so yeah, this is what goes on behind the curtains in a nutshell. Okay, but yeah, there's so much more to this, because just a drawing can't show you everything. Okay, I'm just giving you the basic idea. Okay, it's not picture perfect. Okay, so yeah,
Quick question.
yeah.
Quick question. Inside, like for example, right there where you're gonna be buying at this moment with this drawing. For example, if we would be having after that stop hunt area,
Okay.
right there, would you no a little bit lower on the first stop hunt when we grab liquidity when
Oh,
we
here,
have
yeah,
the,
yeah,
the
yeah.
strong high, right?
Okay.
But right there, for example, if we've already taken and see the inducement a little bit above that area, would you like to always, or do you usually like to refine in that zone some order blocks in certain
Yeah,
time
now
frames?
I'll show you how to refine it. Okay, I'll show
Okay,
you how to refine it, and I'll show you how to really choose the order blocks. Okay,
okay,
I'm
perfect.
telling not I'm not telling the right ones, because no one can tell you what are the right order blocks. All you
Yeah,
can
yeah,
do is
yeah,
choose the high probable ones.
yeah,
Okay,
yeah,
so
yeah.
I'll show you how to choose the high
Cool,
probable
cool.
ones.
Perfect,
Okay,
perfect.
yeah. Okay, because you'll have to always look into the higher time frames, because the lower time frames does not mean anything if you do not
Yeah,
know what the higher time frame wants to do.
yep,
Okay, yeah. Okay, so this is pretty much what goes on in the market. So is it clear? Yeah.
yep.
Okay. Now, let me show you a very clear example, a picture perfect example of this thing. Okay, yeah, let me refresh. Yeah, I'll have to refresh this every 10 minutes. Don't mind that.
No worries.
Yeah, because it's lagging for some reason, trading you lately. Okay. So now, as a smart money trader, what can we see as soon as we open the charts? We can see maybe, yeah, order blocks. Okay. Or as we can see imbalances. Okay, or as we can see this, yeah, maybe this liquidity gets formed, all of that stuff, right? This is what we can see. This is what we are used to see. But for the ones that are used in retail concepts, what can they see? As soon as they open the charts, they'll be like, oh, that's a trend line. Yeah, see that's a trend line. So what they would do is, now you know how trend line traders trade, right? If they bought it here, stop loss goes below this low. Now if they bought it here, where are the stop losses? Right below that low, right? Right below that low. Okay, so this is what the trend line traders would do with their stop loss below that low, and see how this candle went straight through it. Okay, went straight through it, but now there are buyers in the market who wanted to buy from this trend line with their stop loss below that low. And like, just think of it. Even this bullish candle is enough to give them hopes once again. They'll think, okay, now it's gonna come up. Now it's gonna come up. No one is gonna even close it here. Okay, because why? They will wait. This bullish candle is enough. They'll think, okay, now it's gonna come up. Now it's gonna come up. They don't care about drawdowns like us. Okay,
Yeah,
so yeah, so we have, first of all, we have trend line traders, the stop losses of the trend line traders right below that low. Okay, and then we have breakout traders, because why? I told you, if it breaks structure, if price retraces and gives you another breakout structure, the breakout traders will have their sell stops below that low. Okay, sell stops below that low. So yeah, okay, now we have the trend line trade, I'm sorry, the breakout traders too. And then we have smart money traders, because what have the smart money traders been taught? If an order block takes out liquidity, if it has an imbalance left, and if it breaks structure, it's gonna be a high probable order block. Yeah,
yeah.
that is what people, yeah, that is what
Typical.
people have been taught about order blocks, right? So
Yeah,
then, yeah, they will be willing to risk their money here, because why? It's a high probable order block like this, and that's a 10 pip stop loss from a 4-hour time frame. So not bad, right? Not bad
Yeah.
at all for new traders. So they will do this. Okay, they'll do this. And yeah, so we have the stop losses of the smart money traders resting below that low. And then we have supply and demand traders. Look at this, a drop, base, and a rally. And you know that, like, they love when dojis are there as their base. For some reason, they love it. Okay, we don't know why. But look how the bullish candles are getting bigger and bigger after this push to the downside. Okay, so they'll think, okay, now this is where the demand started. So let's buy it here. Stop loss below that low. Okay, so yeah, we have trend line traders, we have smart money traders, we have breakout traders, we have supply and demand traders. And see now all of this stuff too, rising wedges, channels, and all of that. Okay, we have
Yeah.
that. Yeah, and if you go to a lower time frame, like the 15-minute, you can see that's a double bottom. See that? That's a
Yeah.
double bottom. Okay, that's, you know, how that is liquidity. That is
Yeah.
liquidity. And yeah, most importantly, this right here was an unswept Asian session.
Hmm.
Okay, this right here now, yeah, Asia is one of the major parts of what I do. Okay, I'll show you. Asia is the guide to an intraday trade. Okay,
Yeah.
Asia is the one that shows you where the liquidity is, because you know what happens, right? Now there's a set of people called the session breakout traders. Okay, so let's say now you would have seen Asia is pretty much a consolidation, right?
Yep.
Asia is a consolidation. So now there's a set of, no, trust me, there are people on Instagram that sell these courses. Okay,
Yeah.
that sell these courses. Okay, they'll do this. So what's their logic? If price breaks out of the Asian highs, London is going to be bullish.
Yeah.
Okay, if price breaks out of Asian low, London is going to be bearish. Okay, it does not make any sense, right? Now the institutions, they know that. Okay, the institutions know that. So keep in mind, the Asian session always ends at the New York midnight time.
Yeah.
Okay, the Asian session ends at the New York midnight time, because why? It's an algorithm that runs the market. So it basically resets at the New York midnight time. Okay, so that is when new liquidity is getting formed. That is the true day open according to ICT. Okay, so what happens is price will break out of Asia after the New York midnight time. Okay, they will break out of Asia. They'll break out of Asia like this. What happens? Like, why are they doing that? Inducements, inducing buyers into the market. Okay, these fake trend lines and all of that stuff is forming. But what happens with London Open? What happens? They will reverse.
Yeah.
So everyone that wanted to buy here will get taken out. So this is what ICT calls accumulation, manipulation, and a distribution, the
Yeah.
AMD. Okay, so yeah, this is what happens. So this is what he calls the Judas swing. Okay, this is the Judas swing, the false run in the opposite direction. Okay, a false run in the opposite direction, inducing bias into the market, showing people that, yeah, showing people that London is going to be bullish. But what happens with London Open? They will reverse.
Yeah.
And what they're really doing is they are reaching a key level of resistance. Now, when I say a resistance, not the YouTube support and resistance stuff. Okay, I mean something like a high yeah, a key level of price, a key price level. Okay, they're
Yeah.
reaching a key price level, or is a high probable order block. Okay, now why is it high probable? Why is it high probable? Because we have liquidity, we have Asian highs liquidity
Mhm.
resting like right below that point of interest. So that makes this high probable. Okay, so this is what happens. This is what happens. Asia false run in the opposite direction, the Judas swing, and with London Open, they will reverse. Okay, this is what happens. And then, okay, same thing. Price might break out of Asia, might break the Asian lows. What happens? Asian lows taken out, sell stops activated, fake trend lines forming. Okay, people will think, okay, now London is going to be bearish, but what happens with London Open? They will reverse. Okay, so
Yeah.
everyone that wanted to sell this thing will get taken out. Okay, so this is the false run in the opposite direction. Okay, so if you are bullish, you have to always look for buys below the opening price. Okay, buys below the opening price, or else below the Asian low is where you have high probable buys. Okay,
Yep.
is where you have high probable buys. So that is about the Asian highs and lows, and then the Asian midline. Okay, the Asian midline. So let's say price is in a consolidation. Okay, now all of this stuff is from ICT. Okay, nothing that I came
Yep.
up with. Okay,
Mhm.
so yeah, now let's say price is in a consolidation. So to break, now you'd have seen sudden breaks out of a consolidation. Okay, so to break out of this consolidation, the institutions are using the equilibrium price of a consolidation. Okay, equilibrium price. So if there is an order block lining up with the equilibrium price of a consolidation, it is said to be high probable. Now we're not expecting direct moves like this. Okay, what we want to see is we want to see liquidity getting built up, and then this is only for extra confluence like this.
Yeah.
Okay, this will be only for extra confluence because just assume that price is heavily bearish and you have a bullish order block lining up with the Asian midline. it doesn't matter, right? If the high time
Yeah.
frame is bearish, it'll just go straight through it. Okay, it'll just go straight through it. Okay, so that's the thing. So yeah, that's about the Asian midline. Okay, so yeah, now this right here is a lot of liquidity, right? We have the Asian session liquidity that has been unswept. Okay, and yeah, look at this. Look at this. Where did this move come into? Right into the Asian midline.
Mm.
Okay, right into the Asian midline. There are some liquidity getting built up right above that, and QM levels, right? Yeah.
Yeah.
Yeah. So see, this was even a QML.
Yeah.
All of that confirmation.
Retail head and shoulders
Yeah.
inverted, right?
Yeah, inverted head and shoulders.
Yeah.
Okay, you can even call it that way. Okay. So then, if you look at this now, imagine how much of stop losses are resting below that low. Now, this might even be a strong low. Why? Stop hunt breakout structure, but then again, how much of liquidity is resting below that low? Like you have to be flexible, right? You have to be flexible. How much of liquidity is resting below that low? Okay, so when everyone else is going to do this, unaware of this liquidity, what are we going to do? We're going to look for something below that. Now, when I say something below that, we're not going to take this as the inducement and look for this to play out. Okay, we're not going to wait for this to play out because look how far away that is.
Yeah, it's too far down. Yeah.
30 pips away from your liquidity. Okay, so if it takes out this low and then drops for 30 pips, then the ones that had their sell stops here would be in deep profits. It's not even a manipulation. Okay, it is not even a manipulation. So if it's a manipulation, work for the bank
at that point.
Yeah, it doesn't work that way. Okay, so if it's a manipulation, it has to be quick. It has to be quick. So right below that low, you can see, if you take a closer look, from the high of this wick to the low of this wick, what's that? An imbalance.
Yeah.
See that? Now, these are not random stuff. Okay, they always do this on purpose because now they have a cause for lower prices once again. They have a reason to run below these lows, right? Because why? There's an unfilled imbalance.
Yeah.
Okay, there's an unfilled imbalance. So personally, this is how I would refine it. That's it, into this wick. Okay, my entry would be right here, and my stop loss would be at the closing of the candle that has the imbalance, like this. Okay, now this is how I would personally refine it. I did not take it from anyone else. This is how I would personally do it, like this. Okay, like this. So when everyone else is wanting to buy here, I'm buying it right where they're placing their stop loss.
Really buying cheap.
Yeah. Okay. Yeah. So I'm really buying shit now right here, and I'm targeting that high itself.
Yeah.
Like this. Okay. So now look at this. Why is it very high probable? Look at all of that liquidity that's being fed into my entry. So much, right? Okay. We can just laugh at the retailers now. Okay. Laugh at the uninformed traders. Okay. Because they have no idea what's going to happen now. They'll think, okay, now this is what you get taught, right? And when you backtest, you might even see it is working out. Stop hunt. It has an imbalance and it has broken structure, very high probable point of interest, and a doji. Okay, supply and demand traders love these dojis. Okay, and then, okay, what happened? Okay, what happened? Bam, here we have the rejection. Okay, they got taken out. Okay, they got taken out, but we are in the market. Okay, we are in the market right here. Like, see, this is how you know you got the proper entry. If you get the right entry, it does not stay there. Okay, it flies. It flies. Yeah. See, instantly you have, I think that's around 40 pips. Yeah, 40 pips instantly. Okay, so now what can you expect? Now, if you look into market structure, you can see higher highs, higher lows, higher highs, higher lows, higher highs, and a false breakout structure.
Yeah.
Yeah, see that? A false breakout structure. Now, where are the stop losses now? Right above that high. Why? Now people are expecting retracement and a sell, right? Because that's a breakout structure. Yeah, okay, that's a breakout structure. So people are expecting a retracement and a sell. So what they would do is might go to lower time frames. Okay, mark out this. Yeah, I'll have to refresh this now. Okay, give me a second. Yeah, trading view is lagging for some reason very lately. I don't know why.
It's a little glitch, yeah.
Yeah. Okay. So now people, what they would do is they will mark out these order blocks. Okay, they might mark out these order blocks and all of that stuff. And they will expect sells from that area, right? They're going to expect sells from that area. So let's go to the 4 hour and let's see what's happening. Okay, shooting up. Okay, it's inside of the point of interest. and then look at the drop. Okay, now it's starting to drop. Now it's
They give
starting to
you a
drop. Now the
reaction.
thing is, yeah, it will give you a reaction. Now, even I did take a sell here. Okay, I took a sell here. Okay, because I have to be frank. I took a sell here, but okay, exits are more important than entries. Okay, that is what you should understand. Okay, you have to always know where to exit, because anyone can enter anywhere, but where are you going to pay yourself? Okay, what if you take a sell here and you're expecting all of this stuff to get taken off without even taking partials? Okay, so that's dumb. Okay, that's dumb. You have to know where to pay yourself. So what I did was, I just took my profits from this imbalance. That's it. Okay, I'm done. I'm done. I don't even care if it drops. I'm done. Okay, I have taken a major portion off, because look at this. Okay, always make sure you look into the bigger picture. Look at this retail resistance. Look at the retail resistance. How much of liquidity? Okay, or else how many people are shorting this thing, thinking that this right here is a strong resistance, because every single time price comes into that level, it drops. See that? Comes and it drops. See? Now, what will people expect? It comes and then it drops. That is what they're expecting, right? That is what they're expecting. Okay, so now what happened was, when price came into this 1 hour order block, okay, you even got a breakout structure. Breakout structure. Okay, you got a breakout structure. Now what people will do is, yeah, now we know that in these types of candles, the volume is in the body. So they'll mark it out like this, and they will expect retracements and a sell, right? They're expecting a retracement and a sell, because why? That is what you get taught, right? That is what you get taught. And then, yeah, what happens?
It's funny. It's funny because now that you're showing this, is like, I mean, there's the logic behind what they teach, and you back test it, and you know, most of the times it works. And as I told you, right, I even have a Discord mentorship in which that's what you teach, because I mean, in some way it kind of works, but you're really not being the smartest guy.
That's the thing. That's the thing. Okay, now this is the real smart money. Okay, this is the real smart money, like advanced smart money. Like, I'm not telling like I'm perfect at this. No, I do take losses. Okay, I do take losses because yeah, now these are the trades that I take. Now everything that I'm about to show you today, you can just go to my channel and check that out. Okay, everything is there. Everything is clear. Okay, I'm not just cherry picking some setups and showing that to you. No. Okay, it works. It works pretty much every single day. Okay, because you would have seen it, like I post the setup every single day. I have an entry every single day, because now most of the people, they just post the setup only like once in a week. Even intraday traders, only once in a week they have a nice setup. But no, for me, I have an entry pretty much every single day. Every single day. Like some days I miss, but yeah, most of the days I will have around 2 to 3 setups. Okay, because yeah, this is what goes on. Okay, and since price is fractal, the same stuff happens on a lower time frame. Okay, so you can play with the lower time frames too. Okay, so yeah, what happened? Now price is going up, and look at the rejection. Look at the rejection when price gets into these levels. Okay, why? Inducements. Inducements. Okay, it's dropping. It's dropping. Okay, more and more traders are getting in. More and more traders are getting in. But we know that this right here is a pool of liquidity. See that? That's a pool of liquidity. We're targeting that now. Okay, we're targeting that. We're not. Now, if they really want to do a reversal, why would they leave this liquidity unswept? Okay, it doesn't make sense for them to do that, right? Doesn't make sense for them to do that. Okay, and then, yeah, once again, what did I tell you? I told you a high probable point of interest will have liquidity resting below it, right? So now look at all of this liquidity. So if this is liquidity, look for a point of interest above that. Okay, it's going to be high probable. So can you see there's an imbalance left? See that? There is a little imbalance left. So you could use that. Now, you might be wondering why I'm not using this imbalance, because on most of the brokers, this imbalance was actually filled. Okay, this was the one that was not filled. Okay,
the
this
higher
was
one,
the higher one. This was filled on most of the brokers. And if you know ICT, this right here was a rejection block 2. Okay, yeah, I'm sorry, not a rejection block. I'm sorry, it's a mitigation block. Okay, it's a mitigation block 2. I'm sorry for that. Okay, yeah. Okay, so now we have the rejection. I'm sorry, we have the mitigation block, we have the imbalance, and most importantly, we have liquidity resting right below that. Okay, we have liquidity resting right below that. And then what happened? Okay, shooting outside now. Okay, they're shooting outside. And what happened now? Now look how helpless the smart money traders are actually. Okay, they wanted to buy from this high probable order block, stopped out. Okay, then they thought, okay, now let me sell it with a confirmation when price comes here. Okay, got the breakout structure, let's sell it here, stopped out. No idea what's going on. They have no idea what's going on. Okay, and some people, the ones that are using support and resistance, might say, okay, now a strong resistance got broken. Now it might turn into support. So let's buy it here. Okay, expecting moves like this. But then what happens? Okay, what happens? Now they're starting to come down. Okay, now they're starting to come down. And then we have the proper breakout structure. See that?
Yeah.
And then we have the proper break. Why? Now, why can we consider this as a strong high? Because look at how much of liquidity that got wiped, clapped. Okay, everything got taken out. Now, what you can expect? Okay, when you get this breakout structure and the strong high, your eye should directly go into the candle that took out the liquidity, like this.
Yep.
Okay, so a higher time frame order block is a lower time frame breaker block. Okay, so on the one hour, you have this right
little
here.
breaker right there.
Yeah, a little breaker. Okay, so you can have that marked out. Okay, you can have that marked out. And then, okay, what can you do if you missed it here? You can expect retracements. Okay, and then a drop. It comes down. Okay, then it comes down. So this is how liquidity gets built up and how it gets taken out. Okay, so if you took that sell here, you're still in profits. See that? You're still in profits. Okay, around 700 pips. Okay, so like, see how picture perfect this is. The same stuff happened here. Okay, see these fake order blocks, these fake reactions, but eventually they just went to, they just completed the draw on liquidity. Okay, so the same thing is what happened here. Okay, so it makes sense, right? I hope it's clear. Yeah,
completely clear,
man. Okay, then let's get into market structure and trading ranges. Okay, because if you understand your current trading range properly, that's it. Okay, that is all you have to do. If you understand the proper trading range, you will always have the proper directional bias. Okay, you will always have the bias. That's it. Okay, you're going to have the bias. So let's see how we can look into the trading ranges. Okay, so do you have any questions about this? No?
So far, so clear, man.
No, right, perfect.
Can you just maybe give me 1-2 minutes to go to the bathroom? Be back.
Yeah, I'll just have some water. Come, okay.
Okay. I'm gonna stop recording and be back. Thanks.
Okay. Can you hear me,
bro? Ready.
Okay. Then let's get into trading ranges. Okay, because now constantly marking out your current trading range will be very important. Okay, it will be very important because now let's think of it. Now let's assume that, now just for example, let's say from maybe, let's say from here to here is your trading range. Okay, so all you have to focus on is this trading range. Okay, and you don't even bother about what's happening here. Okay, you don't care. You don't care about what's happening here. You don't care about what's happening to your left. Okay, nothing. All you care about is your trading range. Okay, so now marking that out properly will be very important. Okay, so now let's get into it. Okay, so now when we say market structure, now everyone will be like higher highs and higher lows, right? But if it moves this clearly, then everyone is a millionaire by now. Okay, if it moves this clearly. Okay, so it does not happen that way. Okay, it does not happen that way. But if you know the logic behind why these higher highs and higher lows are getting formed, okay, then you know how to trade it. Then you will know how to trade market structure. Okay, so let's see. Now let's say price is going up like this. Okay, so let's say price is going up, creating higher highs and higher lows. Okay, so now whatever I tell you here is applicable on any time frame. Okay, because price is fractal. Okay, so what you should understand is that after every single breakout structure, a new trading range will get created. Okay, after every single breakout structure, a new trading range will get created. So we had this breakout structure, and then we had this breakout structure. Okay, and then we had this breakout structure. Then what happens? What's your current trading range? You had this low right here to this high, and now your current trading range would be from this low to this high. Okay, this is your current trading range. So what are you gonna now? I'll show you how to confirm and all of that stuff, but as of that for now. Now, how do you confirm? Okay, now what are you gonna do once you get your current trading range? You're gonna look for discount and premium price. Like you know about discount and premium prices, right? Yeah.
Yep. Below 50, above 50.
Yeah. Okay. So you're gonna mark out your discount and premium price. So you can take your gun box or your Fibonacci or something, and then draw it out from the range low to the range high. Okay, and then yeah, it's like a normal market. What would you do if you want to buy a product? You're gonna wait for the price of that product to decrease, right?
Yeah.
Okay, so same thing here, same thing here in the market. You're gonna wait until the price decreases, until it comes into a cheaper price. Now when I say a discounted price, now it doesn't have to necessarily come into the 61.8 or 78.6. No, no Fibonacci retracements are required. If it just taps the equilibrium, that would be enough. Okay, just a little tap into the equilibrium would be enough. So yeah, a high probable bullish point of interest will always come from the equilibrium, or else anything below that, anything. Okay, anything below that. And like, doesn't mean that price can't buy from a premium. Now they do whatever they want to do. Okay, they do whatever they want to do. Okay, now if they want to come, they will come here. If they do not, they'll just move it from here. Okay, so we can't help it. Simply, we're not going to take this trade because it's not about trading every single move in the market, right? It's about trading the high probable ones.
Yeah.
Okay, so if it just moves from here, okay, that just let it go. Okay, we don't care. Okay, we don't care. And then, okay, so let's say we have this, because keep in mind, you cannot swing a buy from a premium price. That's the thing. Okay, you can't swing a buy from a premium price. It has to always come from the equilibrium or else anything below that. Okay, so yeah, let's say we had that marked out and now price is coming down. Okay, so it's coming down now. What's the other reason it's coming back down? Okay, what is the other reason they're coming back down? It is to come into a discounted price, that's fine, and it's to take out the internal range liquidity. Okay, the liquidity that is resting inside of this trading range. Okay, that is the internal range liquidity. Now what is this internal range liquidity? It could be anything. Now you can see on the same time frame itself, you can see swing lows getting formed. Now you know the 3 candle formation for a swing low, right?
Yep.
Yeah, like it has to have a higher low to left, higher low to right, and the middle candle becomes your swing low. You know that, right? Because that will be very important. That is where the breakout traders will have their sell stops at. Okay, so yeah, the swing highs and lows will be very important. So now there will be swing lows inside of the market. So those will act as internal range liquidity. Okay, internal range liquidity. So keep in mind, a drop in a bullish market is a hunt for sell stops.
Yep.
Okay, a drop in a bullish market is a hunt for sell stops. And what is the internal range liquidity? Not only this, okay, not only this, we might have unfilled imbalances. Okay, yeah, we might have unmitigated order blocks or something. Okay, all of those areas are internal range liquidity. So price comes down, clears out the sell stops, or it takes out the internal range liquidity. And after taking out the internal range liquidity, where will they go next? External range. Okay, so you can expect a move like this. Okay, from internal range to external range. As after taking our sell stops, they will go after the buy stops. Okay, so this is how higher highs and higher lows are formed. But how do you confirm that a trading range is created? Okay, there has to be a way to confirm, right? Because it's not clear as a drawing. Okay, there has to be a way to confirm it. So it's like this. So let's say it came into a discounted price and gave you somewhat of a strong low. Okay, stop hunt and a break. Now, for you to confirm that this is the low of the trading range, this break isn't enough. Okay, so let me draw the swing points too. It has to give you a break out of this trading range, okay, of this previous higher high. So once you get a break out of this higher high, then you can confirm that this is the low. Okay, but how do you confirm the high? You have to get a break of structure in the opposite direction, like this. Okay, you have to get a breakout structure in the opposite direction. That is what confirms your trading range from here to here. So this is the higher high, higher low, and then the higher high. Okay, you have to get a breakout structure in the opposite direction. Now when I say breakout structure, I want a 3 candle formation to get broken. Okay, a swing low to get broken. Now breaks like this cannot be taken as breaks. Now this is not a break.
Yeah, no.
Okay, because yeah, it never created a higher high. So it has to create a higher high and then break. Okay, so that is the important thing. So once you get that, you have a trading range. Now most people, the common mistake they do is they, like, as soon as price breaks out of this, they'll mark this as their trading range, they'll take this as their discount and premium price, and then price will come here and go up. Okay, then they'll be like, oh, it went from a premium price. Okay, it went from a premium price. But no, it did not go from a premium price. Actually, it did go from a discounted price, of this trading range.
Yep, the small one.
Okay, yeah, the small one. So what you could do is, see, that's why I told you, after every single breakout structure, a new trading range will get created. So from here to here is your trading range. You can buy it here. So after this break from here to here is your trading range. You can buy it here. So if you know the higher time frame direction, until price gets there, you can use the lower time frame trading ranges to stack up the entries. Okay, you can use them to stack up your entries. Okay, so this is how trading ranges are created. Okay, so this is how you confirm it like this. Okay, this is how you confirm it. It's clear, right? I hope it's clear. Yeah. Okay. And then let's assume something like this happened. Let's say price is going up and you had a breakout structure right here. Now, this is when it gets interesting. Okay, what is your current trading range? It's from here, right? From here to here. So you have to always pay attention to your major breakout structure. That is what's going to give you the proper bias. So what's your major breakout structure? It's still bullish. Yeah, it is still bullish. So this was only a minor break. So what is the higher low supposed to do? It's supposed to create a higher high, right? The higher low is supposed to create a higher high. So if this is the higher low, it has to create a higher high, right? It has to create a higher high. Yeah. So how do we know this right here? This is the confirmation that this low has failed to create a higher high. Okay.
It's gonna be
so
taken.
if it, yeah, exactly. So if it fails to create a higher high, this turns into a weak low.
Yep.
Okay, then this turns into a weak low. Now, most of the people, what they do is they will look for confirmation entries from here. Okay, they're going to look for the confirmation entry from here. Okay, now will it work out? No, it's a weak low. It's a weak low. Okay, so why would you buy from a weak low, even though we have liquidity being fed into that? Okay, so what we are going to do is we're going to use that as the inducement and then look for something below that.
That's the fuel for the liquidity now.
Yeah, okay, now that's the fuel. Okay, so now we're going to look for something below that. Okay, now this, what's your current trading range? It's from here to here, right? We are still inside of this trading range. So now price might drop down and clear out this liquidity. So when price comes here, if this is your trading range, where are we currently at? An extremely discounted price. See that? An extremely discounted price. So this is like a VIP pricing for the institutions. Okay, it's like a VIP pricing. So when they get here, they do not want the retailers to enter here. They will quickly move outside of the trading range. These moves will be very quick outside of the trading range like this. Okay, so yeah, this is pretty much what happens. So then we had this break. So we have our trading range from here to here. Okay, higher highs, higher lows, and then a higher high right here. So everything that happened inside of it is just internal structure. It was only to like trap people, only to confuse people. Okay, they're building up all of this stuff. So it makes sense, right? I hope it's clear. Yeah. Okay, so
completely clear.
Yeah, so this is how weak lows are getting taken out. This is how it can get used as an,
I think the only part that maybe confuses people, although anyone can easily maybe understand internal structure and the highs and the lows and the really important trading range, you're not getting confused with that, is the fact that the market is very fractal. So depending when or where they start to analyze their higher time frame, higher highs and higher lows, or depending if it's bearish, they're gonna confuse because they're gonna be starting to see all over the place on the H1 and 15 and 5
that's
and 1.
The thing.
Yeah,
that's the thing. You have to pay attention to these points. Okay, not this, not this.
Now usually, for as a matter of question, Udara, is from your personal experience, what would you say as a possible maybe intraday or even like midterm or short-term swing kind of trader, like holding a trade for 1 or 2 days, depending again on the higher load that must be taken or the lower load that has to be taken. What do you usually like to start as a higher time frame analysis, like the daily or the H4?
For me personally, you won't believe it, I'll start from the weekly. Okay, I will always start from the weekly. Okay, because that shows you where that will really give you a proper directional bias.
Okay.
Always start from the higher time frames, weekly or the daily. Now, sometimes the weekly isn't clear, and you don't have to always look into the weekly like every single day. It takes 5 days to make a weekly candle. So why should you look at it every single day? No,
it's gonna be
on the weekends.
Remaining.
Yeah, on the weekends, if you could get a bias for one single weekly candle, you have the bias for the whole week. That's it. So sometimes you might be wrong, but sometimes if you get that, okay, trust the bias, and then until Friday, you can just like if you're assuming it's gonna be a bullish week. Now you're not gonna guess. Okay, you're not gonna guess because you can't guess anything in the market. Okay, you have to base it on facts. Now, if everything tells you that the market is going to go up today, okay, until Friday you're selling, until Friday you're buying it. Okay, until Friday you're going to buy it. Okay, so you can do something like that. So yeah, I will show you. Okay, I'll show you how I do a top down. I'll show you how I do intraday to swing. Okay, I'll show you how I do intraday only and all of that stuff. Okay, I'll show you. Okay, so yeah, this is how we understand the trading ranges properly. Okay, so you get it, right? I hope it's clear. Yeah. Okay. Then yeah, same thing. Okay, same thing in a bearish market. Okay, same thing in a bearish market. Let me refresh. Price action is actually very interesting if you know how to read it.
Yeah. It's beautiful. It's beautiful, actually.
Yeah, it's beautiful. You don't want any indicator to give you a direction or anything. Okay, you don't want anything. Okay. So yeah, now after every single breakout structure, a new trading range will get created. And then what you're going to do is look for discount and premium prices like this. Okay, and since it's a bearish market, we're going to look for sells, right? So we will anticipate price to get into a premium. Okay, so anything above the equilibrium before falling back down. Okay, so a high probable bearish point of interest will always come from the equilibrium or as anything above that. Okay, anything above that. Okay, it can come from anything above that. So then let's say it's going up. Okay, now what's the other reason they're going up? It's to take out the internal range liquidity, the liquidity that is resting inside of this trading range. Okay, so price might go up, clear out the internal range liquidity, or else they'll take out the buy stops. So keep in mind, a bounce in a bearish market is a hunt for buy stops. Okay, so they go up, clear out the buy stops, takes out the internal range liquidity, and then they'll come back down to take out the external range like this. Okay, so this is how the lower highs and lower lows are formed, but how do we confirm it? So let's see. Okay, so let's say price went, let's say it went into a premium price and it gave you the strong high formation, stop hunt, and a breakout structure. Okay, confirms the strong high. And then, okay, let's say now price is going to come back down. Okay, it is going to come back down like this. Okay, so only after you get a break below this low, you can confirm your trading range from, you can confirm that this is the high of the trading range. Okay, you can confirm that this is the high of the trading range. But how do you confirm the low? You have to get a breakout structure in the opposite direction like this. Okay, so like this. Now, what you can do is, since price is fractal, okay, you can go to a lower time frame, discount and premium, wait for it to come down, build an inducement, buy below that, and you can target, okay, you can target the higher time frame internal range liquidity maybe. Okay, now this will be very slow. Okay, this will be very slow because why? It's a retracement only. Okay, it's a retracement into the strong high. Okay, but keep in mind, if you are taking a buy here, do not just directly target the do not just directly target all of the internal range liquidity, because it can anytime tap into the equilibrium and then drop. Okay, so it's always safe to get your partials from somewhere, pay yourself. That's the most important thing. Okay, so now let's assume it went up into a premium price, gave you a breakout structure, inducement, and then sell it like that. Okay, so you can do this ping pong stuff if you know the proper trading ranges. Okay, now it's not that clear as a drawing. Okay, but let's see how we could do it on the charts really. Okay, so we have that. And then again, let's assume something like this happened. Price has come down and gave you a break here. Okay, let's say it gave you a break here. So now your current trading range is still from here to here, and your major breakout structure was still a bearish one. So this was only a minor bullish breakout structure. Okay, so now this lower high has to create a lower low, right? But this lower high has failed to create a lower low. So then this turns into a weak high. Okay, this turns into a weak high. So if that is a weak high, it will get taken out, right? So most people will be looking for sells from these areas. Okay, they'll look for sells from these areas and get stopped out. So what we are going to do is, we're not going to look for anything around here. We're going to look for something.
Mostly if they're looking at the trend line liquidity right there, they're like, they're going to get so high.
See that? A trend line liquidity being fed into this area. But even then they'll get stopped out. And then they'll come up with some more things. They'll say that, okay, now this inducement stuff don't work out too. Okay, but no, everything works out. Even trend lines work out if you use it the proper way. That's the thing. Okay, anything works out. All you have to do is use it the proper way. That's it. Okay. So yeah, now price can go up and sweep this liquidity right here. Okay, so where are we currently at? If this is the trading range, we are in an extremely premium price, right? An
Mhm.
extremely premium price. So yeah, that's like a VIP pricing for the institutions. Okay, so they do not want the retailers to enter here. So once they get into this, yeah, extreme prices, they will quickly push down.
Yeah.
They'll quickly push down, and yeah, you will have a break. Then you have a new trading range from here to here. Okay, so when this happens, now once the new trading range is created, now for me mostly, this whole area is my point of interest, the buy to sell area. Okay, that whole area is my point of interest. But yeah, I'll show you how to refine it. Okay, I'll show you how to refine it. I'm just telling you, this whole area is a good point for you to look for sells. Okay.
Sure, because it took the liquidity. That's where it started.
Mm.
Yeah.
This is where it started. Okay, this
Yeah.
is where it started to push up to take out this liquidity, because on a lower time frame you can see all of these swings, but if you go to a higher time frame, this is
It's a
just
big
one
candle.
candle.
Yeah.
Yeah, it's a big candle. That's it.
Yeah.
Okay, so yeah, this right here is how trading ranges are created. Okay, so you understand this stuff, right? Yeah, I hope
Yep.
it's clear. Okay, then let's get into charts. Okay, let's get into charts. Let me delete this. Okay. So yeah, like even this buy was pretty clear. Okay, even this buy was pretty clear, but today I wanted to hedge it and then take a buy, but no, it just did not come into my area, but it just went. Yeah, no problem with that. See, we have a stop hunt, breakout structure. So your trading range was from here to here. See, that's why I told you the major breakout structure, that is what matters. Price came back down into an extreme level, and what happened? Shooting out now. Yeah. Okay, now they're shooting out. Okay, so yeah, if you understand the proper trading range, you always have the proper bias. Okay, you will always have the proper bias. And since price is fractal, you can see stop hunt, breakout structure, Asia, okay, see, Asia, accumulation, manipulation, and bam, comes the distribution. Okay,
Yeah.
shooting out. Okay, so yeah, you could have taken it that way, but yeah, I'll show you. You know, I just wanted to show you that it works out. Okay, so yeah. Then let's get into charts. Yeah, now, what's the highest time frame that you would look at as an intraday trader? Like personally, yeah?
You're asking me a question or like explaining?
Yeah. I'm asking you a question. What's the highest time frame that you would look?
Usually I love to do top-down analysis from the weekly,
Oh,
from
that's good.
daily, from H4, H1, because I mean, obviously I understood the structure in terms of basically, let's say, daily lower highs, lower lows, H4 lower high, lower low, but I
Yeah.
just wanted to, or I liked it to do it that way, because I knew that if I saw that, for example, on the weekly we had a lower high and a lower low, and all of
Yeah.
a sudden, let's say on the H4 I had a change of character, right?
So
I
yeah,
knew at that moment, or that's at least what I had been taught, that we're going to
yeah,
be trying to search premium prices into that
premium
possibly
price.
daily, weekly area to start selling back again. So that's why I did it like
Yeah.
a kind of a top-down analysis, but not
Mm-mm.
with this precise way.
Yeah. Okay, now let me show you how I would do a top-down analysis.
Hmm.
Okay, I'll show that. Now, I would always start from the weekly. Okay, now, when I say the weekly, I don't even bother to look at any of this. Okay, I don't care if the weekly is creating lower highs and lower lows. Who cares? No one
Yeah,
cares.
I
Okay,
think
like
that's the big
might,
that's
yeah, might
that's the
never
big
get into
error.
these areas. Yeah,
Yeah,
might never get into these areas. Who knows? Okay, who knows? So
yeah.
as an intraday trader, all I focus on is the next candle. That's it. Okay,
Okay.
that is all I focus on, the next candle. Now let's use the replay tool and do some. So let's say we were, oh no, if we go into these areas, we can't go into lower time frames for entries. So let's look at maybe recent price action. This was December, January. Okay, let's see. Okay, let's say we were here. Okay, let's say we were here. Now, on the weekly, what do I want to see? Okay, on the weekly, what do I want to see? Okay, all I want to see is, what is the major breakout structure on the weekly? Okay, what is the major breakout structure on the weekly? It's bearish, right?
Yeah.
It's a bearish breakout structure now. Yeah, now I know that now currently it is not this clear because why? It's December. Most of the banks do
Yeah.
not trade during December. So the volatility is not here. Okay, the volatility is not present in the market right now. Okay, so yeah, so you'll have to wait until price gives you a clear structure, but I'm just going to show you how I would normally do a top-down analysis. Okay, so yeah, on the weekly, what do we have? We have a major breakout structure, right? We have a major breakout structure, and that is bearish. That confirms that the market is still bearish. Okay, that confirms that the market is still bearish. And where are we currently at? We are inside of an order block. See that? We are inside of an order block, inside of a weekly order block. So what can you expect? You can expect a sell at least until price fills this imbalance the next week. See that? Until at least price gets into this level, you can expect a push to the downside. Okay, because why? We are inside of a higher time frame order block. Now, I'll show you another precise way of refining this. Okay, but now it did not happen on Oanda. It did happen on FXCM and FTMO brokers. Now, who took this liquidity out? Who took this liquidity out? It's that wick, right?
Yeah.
It's the wick that took out the liquidity. So you can right away mark that wick. Okay, so let's go to FXCM. You can see that. See that? So this is how I took the sell from the top. See that? The one that took out the liquidity. Okay, the one that took out the liquidity. So you can always look into those areas. So yeah, let's say we were here. Now, I did have that area marked out. Okay, I did have that area marked out. So let's assume that price really tapped into that area, or let's just use this as your point of interest. Okay, then what are we going to do? Okay, now we have everything. Okay, we have an order block that has now, yeah, this week was the one that actually did the stop hunt, but since it has not been mitigated, so let's say like this. Okay, so we have our point of interest marked, right?
Yeah.
We have the point of interest marked out. It has done a stop hunt, and we have the major breakout structure is still bearish. And we can, what can we expect? We can expect price to fall down until at least the imbalance gets filled. So you have a 90 pip sell at least. We do not know. Okay, we do not know because we're not going to directly sell when price gets here, right? We're going to wait for a lower time frame breakout structure. We're going to wait for all of that good stuff. Okay, then let's go to the daily. Now, this is all I want to see on the weekly. All right. Now, I don't care about any other stuff. I don't care about this. I don't care about this. No, what is the next weekly candle most likely to do? That's all I care about. Okay, because I'm an intraday trader. I don't want to bias for the next couple of years or anything like that. Okay. So yeah, so we had a break here. And then now look at this now. Yeah, after it's gone, anyone can tell you anything, right? That this happened that way, that happened this way, and all of that stuff. But once you're looking at it in real time, it's gonna be a little messy. We know that. Okay.
Yeah.
So yeah, for me personally, I took it this way. I took this as a stop hunt. I took this as a breakout structure. Okay. Then I used my trading range from here to here. And then when price came here, I did have a buy, took my intraday partials, and then what I did was left a runner because why? Higher highs, higher lows, higher highs, right?
Yeah.
So I was leaving a runner into this high. But what happened? I told you, if it breaks structure, it failed. It has failed now. Okay, it has failed to create a higher high. So then this will get taken out. So see, look at the reaction when it came into the weak low once again. Why?
They gave you something.
Yeah, okay, inducements. Now, this was a good buy. I did have a buy right here. That was a 300 pip buy, and I'm an intraday trader. Okay, that's more than enough. Okay, because I have already paid myself. I'm just maximizing my profits. That's why I'm leaving a runner. Okay, so yeah, now look at this. When price came here, look at the reaction. Now, on a lower time frame, you would have gotten a breakout structure, and what happened? Look at that candle, straight through it.
Yeah.
Okay, just straight through it. So because that's weak, and this liquidity was getting built up, and then yeah, it just fell down. Okay, so yeah, I did have a buy here, but yeah, that was a break even, but that's okay. Now, on the daily, I'm going to mark out my trading ranges. Okay, I'm going to mark out my trading range on the daily. Okay, so let's start with the strong high. So can you see this high right here? That
Took all liquidity.
Yeah, and you have the minor break right here, and the major breakout structure right here. That confirms that this right here is your strong high on the daily. Okay, that's your strong high on the daily. Okay, mark that out. And how do you know the strong high has created the low of the trading range? Okay, it has to give you a breakout structure. Now, can you use this breakout structure? No, because this never created a lower low.
Yeah,
never created a lower low. But look at this high right here, created a lower low and then got broken, a swing high.
Yeah,
see that? then got broken. So then what you can do is you can mark out your trading range from here to here, like this. Okay, so this is the only thing you're focusing on. This is your trading range on the daily. Okay, this would be your trading range, and then discount and premium. Okay, yeah, you don't even have to draw it because you can see right away we are in a premium price.
Yeah.
Okay, we're in a premium price because that's why the bearish candles are getting bigger now. Okay, it's getting bigger. So then now we have everything marked out on the daily. We have a strong high marked out. We have the trading range marked out. Okay, now price has already taken out the internal range liquidity of the daily time frame. So what can we expect? Most likely price can go down to take out the external range now, right?
Yeah.
Okay, yeah. So now what we're going to do is we'll go to a lower time frame. Okay, we're going to the 4 hour. Yeah, now, yeah, even the 4 hour is a higher time frame, but compared to a daily, it's a lower time frame. So, yeah. So let's mark it out like this. Okay. Yeah, I want these lines to be straight. I think I have OCD or something. Okay,
Me too. So I usually, I use the keyboard to have this.
Yeah, that's the thing. I want to mark them out very straightly, very properly. Okay. So on the 4 hour, what I'm going to do is I'm going to mark out my obstacles. Okay, now what do I mean by obstacles? Obstacles are the areas where you can expect pullbacks from. Okay, the areas where you can expect pullbacks from. Like, where will the pullbacks come from? It will come from the unmitigated strong lows. Okay, the pullbacks will always come from, now keep that in mind, the pullbacks will always come from the unmitigated strong lows. Okay, unmitigated strong lows. So first of all, let's look at this low right here, because why are we looking at that? Now, if you take a look into this high, you can see this high was a strong high that took out liquidity and broke structure. Okay, broke structure. So when you have a strong high, like I said, your attention should directly go into the candles that swept the liquidity. Okay, these consecutive up candles that took out the liquidity. So yeah, now they were trying so hard to break it, but yeah, I think after 4 days, okay, eventually they broke out of that. Yeah, it took them 4 days to break out of the strong high. Okay, so to break out of the strong high, okay, where did the push really originate from? It's from here. See that? This is where the push started. Okay, this is where the push started, and then it has never been mitigated yet, right? So what I'm going to do is I'm going to mark out my, I'm going to mark out my point of interest. See, I don't care about any of this. I'm marking out this candle, the candle that took out the liquidity, the last push down before the push up. Okay, I'm going to have that marked out because just marking it out wouldn't cost you anything, right? Because once it gets here, this is what you want to see. Okay, a strong low getting formed, because if price did not give you that, you'll just go straight through it. All you have to do is delete it. Okay, that's not going to cost you anything. Okay, so have these areas marked out. This is just an area of interest. That's it. Okay, so we have that marked out, and then we have a strong low right here. We have a strong low right here. Why? Stop hunt and a breakout structure. Yeah. Okay, a stop hunt and a breakout structure. So what did I tell you? How do we know it's really mitigated? You want to see a stop hunt, a breakout structure, and then a swing low getting broken. Then you can use this as the trading range. And if price comes here now and then goes back up, then we can say it is mitigated. But from the time that this strong low was created, do we have any structure break yet? No. See that? So it is not mitigated yet. Okay, it is not mitigated yet. So what you could do is always pay attention to the candle that wipe the liquidity. See that doji? Now it doesn't have to be a bearish candle. Okay, even this bullish candle, that was the one that took out the liquidity. So mark that out. Okay, mark that out.
Area.
Yeah, that's another area where you can expect pullbacks from, because if they do not give you the reaction, just let it go. That's it. Okay, that's it. And then now, do you have any reason to mark out this low right here? Okay, now it did break structure, but did it take out liquidity? No swing low was taken out. So simply it's not a strong low. It only broke structure. It never took out liquidity. Okay, so we can't mark that out. But if you take a look at this low, this did take out some liquidity. And then the structure.
Strong low right there.
Yeah, that's a strong low. So mark that out. The doji that took out the liquidity. Well, so we are currently inside of that. Okay, so now we have all of our reference points marked out. Okay, we have everything marked out. Then let's the fun begin. Let's go to a lower time frame. Now let's see how we could stack up some entries. Okay, now you could even use the 1 hour, the 30 minute or anything, but for intraday, I'm always comfortable with the 15 minute. Okay, but while knowing the higher time frame direction, not only the 15-minute. Okay, you
Yeah.
have to always know where the higher time frame wants to go. So what happened? Now, this is the thing. Since this is a big area, now look how big this area is. 80
Mhm.
pips. Okay,
Yeah.
80 pips. You can't directly go into a 1 minute and then look for a 1 minute breakout structure. Okay, it doesn't make sense for you to do
Yeah.
that, right? It's a weekly point of interest. Okay, so what happened was this: price came into that area, it came into that point of interest, and then did a stop hunt. Can you see that?
Yeah.
Did a stop hunt and then broke structure. See that? Did a stop hunt and then broke structure. So if it takes out liquidity and if it breaks structure, this will turn into a strong high, right?
Yeah.
Strong high. Okay. But how do you know the strong high has created the low of the trading range? Okay. First thing is it has to break below this. Okay, that's done. And what's
Yeah.
the next thing? I told you it has to break a swing high. Okay, it has to break a swing high. But can this be taken as a breakout structure? No, because this never created a lower low.
Yeah.
Okay, but look at this. Look at this high, this swing high created this low. Okay, so now we'll have to wait until that gets taken up.
Yeah.
Okay, so yeah, let's wait. Let's wait. Now, first I'll show you how this trading range thing works, and then let's get into the intraday charts, intraday trades. Okay, yeah, like
There
that.
we go.
We have a break. Okay, so then your trading range, you can confirm from here to here. This becomes your new trading range. Okay, this becomes your new trading range. So let's mark that out. Then you know what to do: discount and premium, internal range, look for the POI above that. Okay, we're going to look for that. Now, look at this. You could have traded all of these moves. All of these moves, you don't even have to use the lower time frames. Look at this. You have a stop hunt. You have a breakout structure. So a stop hunt and a breakout structure makes this high a strong high, right?
Yeah.
Makes this a strong high. So let's make this big and this small. Let's mark that out in another color. Maybe, yeah, okay. Strong high. How do we know the strong high has created the low of the trading range? First, it has to break below this. Then you have to get a break of a swing high. Okay, so from here to here is your trading range. Why is price going up? Is to take out the internal range liquidity.
Yeah.
Okay, took the internal range liquidity out. You're looking for a sell. Where are you targeting? The low of the trading range. And look at the drop. It just comes straight into the targets.
Immediately.
Okay, after clearing that, yeah, bam, immediately it comes because they have no job here. Okay, so yeah, then you can use this because your previous entry will be your next point of interest, like this. Okay, so price swept this liquidity and then they're coming down. Okay, they're coming down right here. Okay, so then we have a strong high here. Now look at this. This is when it gets interesting. At the beginning of the session, I told you about something like this, right? I told you this is not a breakout structure. I told you it's not a breakout structure, it's an inducement. Okay, why did I tell you that? Now it will all make sense. Look at this stop hunt, breakout structure. Then what did I tell you? How do we know the low of the trading range is created? It has to break a swing high, right? It has to break a swing high. But this low right here, did it break a swing high? See that?
Point.
Did this low break any swing high? No, it did not. Can you see that?
Yeah.
So this right here cannot be taken as a structural point. So if this cannot be taken as a structural point, this cannot be taken as a structural point either. See that? Okay,
Yeah.
but look at this. This low, yeah, this high created a lower low and then got broken. So your trading range is from here to here, not from here to here or from here to here. Now, if you use it this way, now this is what people would do. Lows, highs, lows, breakout structure, expecting buys, and then they'll get clapped out.
Yeah.
See that? Now
Yeah.
they would take this as a breakout structure, but what we are doing is we know it's not a structural point. Now, this is why we should always stick to the higher time frames, because if you use a 5 minute, for sure you might have
A lot of noise. Yeah.
high. You might have a breakout structure for sure, but the higher time frames will show you what to do. Okay, see, you're taking a sell here. Where did this come into? Look at that imbalance, tiny little imbalance. Right into that, and then it drops. Okay, and then it drops. Now, yeah, let me refresh this once more. Oh, I think I'll have to use the replay tool again.
Yeah, no problem, no problem.
Yeah. Okay, so we were somewhere around here. Okay, so you see that, right? So this is where we enter, and then this is where we exit. Okay, now look at this. Came down, this false breakout structure. Imagine how many people wanted to buy here. And look at the reactions. Look at the reactions and then look at that candle.
Boom.
Straight through it. Straight through it. Okay, everyone gets taken out. Okay, everyone gets taken out. So yeah, this turns into a strong high. But then the next time when it comes here, are you gonna expect sells? Are you going to expect sells? No. Why are you not gonna expect sells? Okay, because the higher time frame trading range is created. So this turns into internal range liquidity.
Yeah.
See that? That turns into internal range liquidity. So the trick is always look for the higher time frame point of interest inside of the lower time frame trading range. That's the trick. Okay, lower time frame trading range, higher time frame point of interest. Okay, so on the 4 hour, let's see. Let's say we had this, the body never been tapped yet, and we have this wick right here above all of that liquidity. See that? Okay, these are the two reference points we have on the 4 hour. If you go to 1 hour, this is extremely risky because why? Because why? Trend line.
Yeah.
See that? A trend line is getting formed. Now, if you're going to expect a sell from here, you're just doing the same thing like a retail trader, nothing else. Same thing like a retail trader. Okay, so right away you can delete it. Right away you can delete it. But this right here, okay, this right here, this is a very high probable order block, right? Because look at this trend line liquidity being fed into a strong high. Okay, being fed into a strong high. So what you could do is sell it right away. Stop loss can go above the strong high and then target lower prices if you really want to. But for me, I do not like anything more than 5 pips. Okay, I don't like it. I don't like it personally. That's me. Okay, I want to see my stop loss always in between 2 to 5 pips. I don't use anything less than 2 pips. I don't use anything more than 5 pips. Okay, so I will always refine it. So now, how will I refine it? Inside of this 4 hour rejection block, okay, and a 1 hour order block, I'll go to a lower time frame. And then what do we have here? Lining up with that level, we have a, what's this? A breaker.
Yep.
Refining it to the breaker like this. Okay, I'm refining it to the breaker. And then now what makes the breaker high probable? Trend line liquidity fed into that. Okay, trend line liquidity. So now what I'm doing is I'm selling it. Stop loss can go above. Now it makes sense, right? Now this is, now even though this is my setup on trading view, I can't do this on MT4. Why? Spreads. Okay, I'll have to put it like 1 pip below and 1 pip above the original stop loss. Okay, first thing is I have to get tagged in, and the other thing is my stop loss has to be safe, right? Or spreads can take you out. Okay, but yeah, this is the original setup that I used. Okay, this is the original setup that I used. Okay, so yeah, like this. And then you're having that same target like this. Okay, then it's about waiting. Okay, then it's about waiting. So let's wait. Okay, let's go to 15 minutes. Let's stay here. Okay, let's see what happened. Okay, now they're starting to go up. And look at the reactions when they're giving when it comes near that trend line.
Yeah, they gave you something.
Look at the rejections. Yeah, it's giving you rejections. Why? Hyping up. Okay, hyping you up. And then look what happened. Okay, look what happened. So we have this. Let's take it here. So we had this trend line liquidity and all of that stuff. And then, boom. Look at that. Okay, it just shoots up immediately. Okay, it just shoots up. Now, why are they doing that? Okay, why are they doing that? These moves are inducements too. Okay, these moves are inducements too, because look at this. This one single candle moved for 35 pips.
Yeah.
Okay, now what have you been taught? Do not jump in front of a raging bull. Okay, now who would want to sell this thing when it's coming up with this high momentum? Okay, everyone would think, okay, now the downtrend is broken. Now it's going to be an uptrend. It's going to be an uptrend. So everyone will start buying this thing. Buy this all over the place. They're buying this. But I told you, where is it right here now? An extremely premium price of this trading range. Okay, so now what can you expect? Quick moves outside of the trading range, because why? Their job is done. Their job is done. Internal range is being cleared out, and then here it comes. Well, now they're coming down. Okay, now they're coming down. Yeah, immediately. Okay, and then now I don't risk 1% because I'm trading a 100K TMO count. Okay, now why would I risk? Look at this. That's 2 pips. Yeah, like $1,000 on 2 pips. That's a 50 standard lot size. Okay, I fear them. I fear them, honestly. I don't want a 50 standard lot size. So what
Yeah.
I'm doing is I'm risking only around $100 to $150 per trade. Okay, so if I risk 100, that how much is that? A 5 standard. Okay,
Yep.
a 5 standard into 90 pips, that's $4,500. Now, what more do you need? Okay,
More than
what more
enough.
yeah, now because do I have any reason to parcel out at this area? No. Look at all of this liquidity. Why would price reverse from this? Okay, why would price reverse? And then, yeah, broke out of the trading range. Okay, broke out of the trading range. Now, then it gets even more better. Okay, what I'm doing is taking my partials and where's the daily external range liquidity? Right here. Leave it like that. See that? Now look at the risk to reward ratio. That's the 1 to 207. Okay. Now, yeah, now that's not 207% of my account. Okay. I don't risk 1%, but yeah, I'm just showing you. See that? 2 pip
That's
stop
PR,
loss
yeah.
target. Okay. 400 pip target. Okay. So yeah, because all of these were planned. You see how well organized these trades are, right?
Yeah.
Coming from the higher time frame. From the higher time frame, and we were taking we took this confirmation on lower time frame. That's it. Okay, we took the confirmation on a lower time frame, and then when price broke below this low, we know that a new trading range is created from this high. Okay, from this high, and then I told you, where will your attention go into? The candle that swept the liquidity. Like this. Now, what's the difference here? Here we could have directly sniped it with a limit, because why? It was a small range, right? It was refinable, but how could you refine a range of 35 pips? See that? That's the thing. Okay, so now you will have to wait for a confirmation entry. Okay, you will have to wait for a confirmation entry. Okay, so yeah, now let's wait. Okay, let's wait. Then yeah, now we have all of these obstacles marked out. Okay, let's go to a lower time frame and then wait for that. Okay, now we have the high marked out. We have the high marked out. Yeah, this happened on October, so I don't remember all of this properly, but yeah, I dictate of the so let's see. Yeah, price is coming down, and here we have a break. Can you see that?
Yep.
Yeah, here we have the break. So now I did have a buy here. Okay, look what happened though. I had a buy here. I set my limit here because why? Came down, created the inducement, but it just wicked below my stop loss, and then it started going up. Okay,
Yeah.
I don't even bother to see. I don't even bother to see what happened. Okay, because that happens. Okay, that happens. Nothing is perfect in the market. Okay, nothing is perfect. Okay, so like just because I took this loss, I'm not gonna go to YouTube and see what's the best strategy out there. No, I don't care. Okay,
Yeah.
so yeah, if it just happens. Okay, it happens. So it just took me out. So we have a stop hunt and a breakout structure. Okay, now what can we see? Now, if you go to the 4-hour, why did we mark out these areas as obstacles? So for this sell, okay, for the sell that's coming here, these areas will act as obstacles, right? Because they are unmitigated strong lows. Okay, unmitigated strong lows. So the same way, if you go to a lower time frame, now until price gets here, now this is your trading range. Until price gets here, because we are intraday traders, we can always hedge it upwards, right? We can always hedge price upwards. So when price is going up, let's say we had a buy from somewhere around here. So for this buy, there will be obstacle. What's the obstacle? Unmitigated strong highs now. See that? So we have this high right here, unmitigated stop hunt
Break.
and a breakout structure. Okay. So if we take it this way, what's this wick doing? Internal range liquidity. Yeah. Internal range liquidity, and right above that we had an imbalance. Okay, so let's wait, and then now, yeah, like I said, price is fractal, so every single time frame has its own trading range, so we can use all of them. Okay, we can use all of those trading ranges. So what we're going to do is we have that marked out like this. Okay, now this is when the intraday fun begins. Okay, so let's see what to do. Yeah, I have to have all of these lines marked out properly. Okay, let's see. Yeah, now price is going up, and here you have a breakout structure. See that?
Yep.
First, it has to break outside of this, and then it has to give you a break. So then your lower time frame trading range would be from here to here. Yeah. Okay. So then if you take it this way, why is price coming down? Is to come into a discounted price to take out the internal range liquidity, right? So what's the internal range liquidity? Here we have a swing low. But imagine how many people would want to buy it from here because of that imbalance. Okay, that's the thing. Okay, you have to always pay attention. So what did I tell you? Okay, lower time frame trade in range, high time frame point of interest once again. Okay, higher time frame point of interest.
Yeah.
On the 1 hour, we had nothing. 30-minute, still nothing. Okay, on the 15-minute, what do we have here? Right below the below the internal range liquidity, we have the body of the candle that swept the liquidity, never mitigated.
Yep.
See that? So what you could do is leave this area as it is, go to a lower time frame and refine it. Now, unfortunately, we can't go into the 1 minute because this is on
It's
October.
too far away.
You
Yeah.
know that, right? Yeah, it's too far away. But yeah, now what you could do is leave this area as it is, put your stop loss below this wick. See that? On a lower time frame, there is always an order block right here. You know that, right? High time frame wicks, lower time frame order blocks.
Yep.
Okay. So yeah, like on this time frame, look at this, equal lows even. We even
Perfect,
have
yeah.
equal lows. Okay, perfect liquidity being fed into that. And yeah, we have all of that stuff marked out. We have that stuff marked out like this. Okay, but unfortunately, I couldn't take the buy. I had this marked out because why? This happened during Asia, and I don't trade Asia.
Okay.
Okay, so yeah, I don't trade Asia. I'll always wait for Asia to end because just think of it. What business does Asia have on GBP USD? That's
Yeah.
the thing. Okay, so it's most of the time a consolidation. So I was waiting for Asia to end. Okay, like even during Asia, this played out right to the tick, Look at this.
Yeah.
I'll have to refresh this. Give me a second.
So you normally
Yeah.
wouldn't be trading Asia range, never, even though you know it sets as a
No,
perfect.
I will not.
Okay.
I will
Okay.
not. Like I don't even care if it plays out. Okay, I don't even care if the setup plays out during Asia. I'm not gonna trade it. Okay, that's the one rule I have. Because those days I used to trade Asia and I get burnt every single time I do that. Okay, like sometimes I'll have a buy and then London opens, it clears out and it
Boom.
goes.
Yeah.
Because I don't trade it. Okay, I'm not gonna trade Asia.
And
So yeah, let's wait. Yeah.
for an intraday, do you like to, let's say, still trade New York, or just focus on London, or
No,
both?
I trade both. I trade
Both,
both.
okay.
Okay, yeah, because for me, that's the perks of living in Asia. Okay, now I can trade London because London is at 12:30, yeah, 1:30 p.m. New York is at 6:30 p.m. Okay, so I
That's
can trade both.
Yeah, it's amazing.
Yeah, I can trade both. Now I think for you, London is around 2 a.m.
Yeah, I'm
Yeah,
sleeping
that's
at
the
that
problem.
moment. Yeah.
That's because that's the thing. If you take a trade during London, we know that London has the most chance of making the high or the low of the day. Okay,
Yeah.
we know that. So if you take a trade during London, you're in profits for around 8
Long
hours
time.
until the day
Yeah.
ends. Yeah, for a long time. Okay, so yeah, look at this. Even during London, look how it played out. I'm sorry, even during Asia, look how it played out. Okay, so yeah, right to the tick. And then, so keep in mind, if price is reaching a point of interest during a session opening, okay, it is gonna be very high problem. Okay, so always keep that in mind. Okay, always keep that in mind. But now the thing is, can you expect sales from this area? See that? Can you expect sales from this area? No. Why? Because if this is the trade in range, now price has taken out the internal range liquidity. So what's the draw on liquidity? External range. If you look for sales here, thinking that, okay, Asian lows inducement, you'll get taken out.
Yeah.
You'll get taken out. Okay, so you have to focus on all of that stuff, not only one thing. So let's wait for that to get taken out and then look for a setup. Okay. And yeah, now London has opened. We have that. Okay, no, not yet. London opens at, London has opened. It opens at 12:30. That's my time. And what happened? When London opened, look at that.
Yeah.
Okay, look at the move. Look at the quick move to the upside. Why are they doing that? Inducements, showing people that London is going to be bullish. So people will start buying this thing. The first candle, that is what they focus on. Okay, they'll start buying this thing, but we're selling it. Okay, because why? Once again, do not jump in front of a raging bull. That's what you get taught, right?
Yep.
Okay, so no one is going to sell this thing, but we're doing it. We know their intentions. Okay, like ICT says, if price is reaching your point of interest with high momentum, it's going to be high problem. Okay, now most people will fear that. Okay, he says the quicker it reaches your point of interest, the quicker the high probable is going to be, the better. Okay, so that's the thing. Okay, so yeah, now you can have your stop loss above the strong high, no problem. That's your personal preference, but I don't like that. I'm going to have it above this wick. See that? Above this candle. And then let's see where we could target. Now it's falling. Now it's falling. and then you had a break right here. You had a break right here. And then this day, could you expect the Asian lows to get taken out? No, right? Because what has Asia done? Asia has done a stop hunt and broken structure. See that? Asia has done a stop hunt and broken structure. So which means simply Asia is a strong high. I'm sorry, a strong low.
It's gonna
Okay,
hold.
it's a strong low. Yeah, it's gonna hold. So we can use that as the low of the trading range. But how do we know the low has created the high? Here we have the break. See that? Here we have the break of a swing low. So then mark that out. So once again, if this is your trading range, what's this? Internal range liquidity. Mark that out. Like this. Okay, so what's the trick I told you? Lower time frame trading range, higher time frame point of interest. Okay, higher time frame point of interest. So on the 1 hour, we have the body of the candle right here. On the 30-minute, yeah, we had a candle right here. On the 15-minute, it makes even more clear. Look at this.
Yeah,
the candle that took out the liquidity. Right here, see that? The candle that took out the liquidity. Now, since the range is too big, go to a lower time frame. What do we have here? Breaker.
Yeah.
Refine it to the breaker. Refine it to the breaker. What makes it high probable? Liquidity resting right above that. See that? Liquidity resting right above that. So what I'm going to do is I'm going to buy it. Stop loss can go below that low, 2.9 pips, and I'm targeting external range liquidity. See that? Now it's going to be ping pong. Okay, it's going to be a sell to buy. Okay, now personally, what I would do is, okay, if I have a setup like this, I will risk like for sure now this is profits. Okay, I will risk the whole profit on this buy because that way I'm not losing my capital. Okay, I'll risk the whole profit on the buy. Okay, and then yeah, let's see what happened. It's coming down. Now look at that. Look at that. Just a little tap, and right away you get the reaction.
Yeah.
Okay, right away you get the reaction. So this is why I always told you, entry below the liquidity. Okay, that is what makes sense. Okay, and then what happens? Well, outside. Okay, it is just shooting outside. So this happened during New York. This was a good New York setup.
Yep.
Okay, this happened 15 minutes after New York. Okay, so this was a good New York setup, and this is London. Sell to buy, sell to buy. Okay, from London to New York. And then you can either take your partials here, or you can take everything out and leave a runner into the higher time frame targets. Okay, as into this. Now, do you have any reason to look for buys in this area? No. Okay. Because why? Those buys were only short term, right? We are in a premium price now. We are inside of a sell zone. So what are we going to expect now? We're waiting for the confirmation. What's your confirmation? This, a strong high. Okay, a strong high getting formed. Now, look at this. Now, this is pure market structure. See? Higher highs, higher lows, higher highs, higher lows. See that? If you understand structure properly,
smart structure.
Okay, smart structure. If you understand structure properly, you can just milk the market. That's the thing. Okay, yeah. Now on the 15-minute, we do have some internal. I don't know if it gets swept, but yeah, let's wait for confirmation. I don't think it got swept. Let's see. Yeah, it got swept. Internal range liquidity got swept. So let's say we held it until here. No, yeah. I think I closed everything here, so no point of just drawing this out. I closed everything here. Okay, yeah, I'm just showing you. You could have even held it until this. Okay, but yeah, if you're really unsure, you can just close it here. Because what if they taps here and then drops like this? That can happen, right? That can happen anytime. Okay, because that's a premium price. That can happen. Okay, so yeah, we do it, and then we are inside of a sell zone. Okay, here we have our confirmation. Stop hunt, and we had a breakout structure.
Yep.
Yeah, stop hunt and a breakout structure. And then same thing, wait for Asia to end, look for the setup. Okay, that's why I told you it's a very consistent setup. I told that to you, right?
Yeah.
Wait for Asia to end, look for the setup. Okay, so let's wait. Okay, Asia is over now. Asia is over. Now, what are you going to look for? Okay, now keep in mind, where are we at? We are in a premium price, okay? We are in a premium price, so we are focused on sells, not on buys, okay? Just because you had the Asian low here, you're not going to buy it from somewhere around here because we're in a sell zone, okay? We're in a sell zone. So what are we going to look at now? Okay, we have to see if the Asian highs are strong or not. Okay, now it is strong. Why? Asia has done a stop hunt.
Yep, and a boss.
Yeah, and a breakout structure right here.
A lot of
Right
people would
here.
have usually what they do is that they see that extreme supply right there, the higher one, and
The
they don't
higher one.
understand. Yeah, no,
Yeah, this thing right here. Yeah.
yeah, they don't
Yeah,
understand what H is
they
playing.
might take it like this. Okay. They might take Asian highs as an inducement because they do not
Liquidity.
know about strong highs and strong lows.
Yeah,
And then they will use it. They'll wait for this to play out and then it will just go.
yeah,
That's the thing.
yeah.
Okay. Now
That's the
it's about
typical.
taking a risk. Yeah, that's the typical stuff. Okay, you can't do that. You have to read price action properly.
Yep.
Okay, because these are the ones that like to do a stop hunt, who is involved? Institutions, right? So if
Yep.
the institutions are involved, obviously these price levels are holding. They
Yeah.
are the ones that are protecting this. So the reason they took this out was to give another a good price level. So this price level has to hold because they have done a stop hunt.
Yeah.
Okay. So yeah, now it has to hold. So let's mark that out. Strong high. So let's wait. All right. Now London is gonna open, and here London opens. Look at that fake move. The sessions always open with those fake moves. Why?
Yeah.
Inducements.
Yep.
Showing people London is going to be bullish. Everyone is starting to buy this up candle. Okay, buying this up candle, engulfing, engulfing candle. Okay, but this is our trade in range. Now here, look how same this setup looks. From here to here was the trade in range, was this internal range liquidity. So here to here is the trade in range, was this internal range liquidity.
Yeah.
Okay, now you don't even have to have a point of interest. Okay, you don't even have to have a point of interest. You know that this is internal range liquidity. Set a limit like a pip above that. Okay,
Yep.
Stop loss above the strong high. 2.7 pips. Why would you want a point of interest?
If it's between 2 and 5,
2
no
to
matter
5.
refine it.
Yeah,
because
no,
it's gonna be-
I would. Yeah, I don't even care. I don't refine it. Okay, yeah, 2 to 5. And then what happened? Tapped, instant rejections. Okay, and here comes the drop. Done. You're done.
Yeah.
Okay, you can take your partials. You know, I'm lucky I took some partials out, but not a lot. Okay, I used like a 5 standard here, and I only removed 1 standard here. Okay, I removed 1 standard here, and then because why? It's a swing trade, right? It's a swing trade. Okay, why would I? Yeah. Okay, so I was targeting this low, but then shit happened. Okay, price came up, stopped me out at break even. This was during New York kill zone.
Yeah.
And then it started to melt.
Yeah.
Okay, it
A little
started
bit
to
of
melt.
the spread.
Yeah, that's the thing. Now, I did not expect a 90% retracement like this. Okay, now this was a strong high. That is why it got protected. Stop hunt, break of structure, break of a swing high.
Yeah.
Same
Inducement.
stuff. Yeah, see, all of this will be inducements and a sell and a sell. See that? You could have easily taken that sell. Okay, but yeah, I did not take the sell because I did not expect this to happen. Okay, because after taking the partials, I won't even look at the charts once again. Okay, because why should I? Why should I? I have a beautiful trade. Okay, why should I just keep looking at the charts all the time? Okay, so what I did was but when I came in the night, this is what I saw. It has stopped me out at break even and now it's melting. Okay, so I was really annoyed. Okay, but yeah, that's like a sacrifice to the market. So we can't help it. Okay, we can't help it. And yeah, now just look at it. If I was still in that trade, I'm holding it until here. So that is why I was really annoyed. Okay, because I had this pre-planned and all of that stuff, but then I got stopped.
We already knew where it was going at that moment.
Yeah, we knew that. Okay, because it's coming from a premium. Okay, from a premium. But yeah, now since it has already gone out, now I can tell this to you confidently, but you know that, right? When it's in the live charts, okay, still you will be expecting buys from these areas.
Yeah.
Okay. So yeah.
Anyone.
Okay, that happens. That happens. Yeah. Anyone. Okay. That happens because after all, it's just a game of emotions. Okay. That's the thing. Okay. So I was like, honestly, like I think somewhere around here, right below this, I was expecting a buy, but then again, I thought that's the reason why I just pointed that out. Okay.
A little bit of a ping pong buy, right?
Yeah, just a little buy. I was expecting a buy, honestly. Yeah, at least until this level. But then I thought once again, okay, this was the trade in range, and they have taken out the internal range, and they're coming from a premium price, which means their target is the external range. So why would I take a buy here? I'll get stopped out, right? So then, yeah, right away, no, I don't want to buy. I don't want that. Okay, so yeah. Then if you go to the 1 hour, now see once again, pure market structure, nothing else. Strong high, right? We have broken out of this pure market structure. See, low highs, lower lows, lower highs. You can expect a lower low somewhere around here, lower high, and then yeah, you can expect it that way. See that? Okay, so let's wait and see. Okay, let's wait and see. Okay, let's wait and see. Now it's starting to drop. Okay, it's starting to drop, And yeah, now you can see that right now, this was a consolidation. I did have a, yeah, let me refresh this. Okay.
Dara,
Yeah,
give
you
me
saw
just
how it
1 minute to
started.
go to the bathroom, man.
Yeah, no
Just 1 minute.
problem. Yeah, no problem.
I'm back.
Okay. All
Thanks,
right.
man.
Can you hear me? Yeah. Okay.
Yeah.
Okay. So then this day, okay, this day, let's see. I did have a sell here, okay, but got stopped out because of spreads once again. Okay, not even a break even. I got stopped out. Let's see where Asia was. Yeah, after the New York daylight, yeah, the daylight savings time thing, times changed a little bit. So this was Asia. Okay, this was Asia. And then the trading range that I used, okay, now you can see that, right? When the higher time frame ranges are not clear, you can't just like force the trading range to get created, right? You can't do that.
Yeah.
Okay, you'll have to deal with the lower time frames then. So on the 30-minute, it wasn't clear once again. 15-minute, no. 5-minute, yeah.
There you
This,
go.
yeah. So we had this top hunt. Okay, we had this top hunt. We had this breakout structure. So this is the strong high, right? Not the Asian highs. This was the strong high. Okay, this right here was the strong high. So Asian highs will be an inducement. See that? Asian highs will be an inducement. So London Open did not give me the setup. Okay, but yeah, here comes New York, and then it dropped. Okay, then it dropped. Yeah, this is where I got a break even. Okay, so
Yeah.
I sold it. I think it was a 3-minute point of interest. Let's see. Yeah, here it is. Right here. Okay, I sold it right here. I had a sell, it dropped down, price came up, stopped me out at break even, and then it dropped once again. So yeah, that happened. Okay, that happened. So can't help it. Things like that happen.
That's a good example
Yeah.
of a lower time from Asia high being as an inducement.
Inducement. Yeah,
I hadn't
exactly.
seen that one. Yeah.
Okay, I'll show you a lot of examples. Okay, so yeah, we have Asia like that. And then, yeah, let's wait until it runs into the next day, because this day we took a, not a loss, actually, it was a break even. Yeah, even this day there were no setups actually. Asia, see that? Asia,
Yeah.
now you could have even taken it. Now I can see it in hindsight though, but I did not. Honestly, I did not look for the setup that day, because see, you could have taken it this way: stop hunt, breakout structure.
That would have been
Asian
like an
highs
internal
as an
structure, yeah,
inducement.
right?
Yeah, exactly.
Because
Okay.
the current lower low was
This
a little
right
bit
here was the
yeah.
low. See that? This was the low. Okay, that's why I told you I did not look for the sell. Okay, I did not take the sell that day. Okay, but yeah, you could have taken it right above the Asian highs. Yeah, you did not have a point of interest actually. Oh, you had this wick. Look at that. You had this long ass wick that did not get mitigated.
Yeah.
So you could have sold it from there. But yeah, now right now, since it's gone, I can tell you, but yeah, I did not take that. Okay, I did not take that. Yeah, because it wasn't clear. Okay, it wasn't clear. So yeah, let it drop. Let it drop. Let's wait. Now that is why I use only 2 pairs. Okay, if GU is not clear, I'll go to gold. No problem. Okay, if both are not clear, I'll stay out of the market. Okay, we can't force trade up. We can't force
You gotta
setups.
keep the focus, because
That's the thing. That's the
trying to
thing.
follow this on a lot of pairs. It's impossible, man. You gotta forget about the trading ranges and a lot of things.
Exactly. Okay, because what I used to did was like, I had more than 15 pairs in my watch list.
Yeah.
Okay, and then I'll set alerts on every single one of them. And with London Open, all alerts go off at once, all of them. Then I have no idea what to trade. Okay, then like if I trade 5, like, all 5 will be losses. All of them, because I can't focus on one thing. That's
So
the
you basically trade GU and gold,
and gold only,
not
nothing.
EU, not EU,
No,
right?
the thing is, now I don't use, like you would have seen, I don't use huge lot sizes. Okay, so I want a pair that moves a lot. Now EU does not move a lot.
Perfect.
Okay, GU moves a lot. It's perfect for intraday. Okay, GU and even gold. Okay, but EU, it's only on it. Like I think the ADR of the EU is around 30 to 40 pips. Okay, so my 2 standards or my 3 standards isn't enough to make that money on EU.
Yeah.
Okay, so yeah, I'm using GU. Okay, I'll play GU and gold. That's the thing. Okay. Yeah, so let's wait until price gets here. Okay, and Okay, here we are inside of a point of interest. Okay,
Yeah.
we're inside of a point of interest. Now, what do you want to see? That's it, right? That's your confirmation. So let's
Strong
wait for
low.
that. Yeah, a strong low getting created inside of the higher time frame point of interest. Okay, so let's wait and see.
Now at that
Okay.
point, would you
Yeah.
would have ideally waited for the M15 again? Because I've been looking that a lot of times you continue looking at the M15. In this one, if
Yeah,
you do it in the
you could
M5,
have
you're
even
gonna see
waited to that.
a faster,
Okay.
maybe strong low form that could be acting as
Yeah, a
a
strong one. Okay. Now it's risky. It is always risky. Okay. It is
okay.
always risky to directly jump into the lower time frames because why? The range was this big.
Yeah, yeah,
Okay.
yeah.
What if they do this, tap into this, and then come back down and then
That's
do
what
this?
that's what I was
Okay.
asking too. Rather,
Yeah. Okay. So
better keep it in M15 usually,
yeah,
right?
it's better to keep it in M15. Exactly. Okay. It's always better to keep it in M15. But
Yeah.
I think if you use the M15, the line chart gave you a break. See
Yeah.
that? Yeah, the line chart gave you a break, but the candles never did. This was not a swing high. Okay,
Yeah.
this was not a swing high, but yeah, I actually used the 5 minute. That's why I'm showing you the 5 minute. Okay, so let's
Okay.
see. So on the 5 minute, we had a stop hunt and a breakout structure. Okay, and a breakout structure. So then, same thing. What are we going to do? Wait for Asia to end, hunt for the setup. See that?
Yeah.
Same thing again and again. Okay, nothing else. Wait for Asia to end. Okay, let's wait. Look at the consolidation during Asia.
Yeah.
Okay. Yeah. So here we have that. Okay. So this day, can we expect the Asian lows to hold? No, right?
No.
Because what did it leave behind? Equal lows. Okay. So these are the days that I love because
Yeah.
days like this, you always have two setups. Okay. Because since it's here, you can hedge until Asian lows gets taken out very
Yeah.
safely. Okay. You can hedge, or else what you can do is wait until price gets here and then take a buy. Okay, no
Yeah.
problem with that. But I love days like this. I will always hedge it. I'll always hedge it. Okay, so above Asia, we had this wick. Above the wick, we had this imbalance. Okay, I did not take it from the imbalance though. Okay, I'll show you how I took it. Yeah, now before that, right below Asia, we had this 5-minute point of interest. Can you see that?
Yep.
Okay, yeah. Very high probable. Asian lows acting as the inducement. Okay, very, very high probable. Oh shit, I clicked the 1 minute. Yeah, let's go there once again. Okay. Okay, so then I was waiting for the imbalance to get filled. Okay, but yeah, it did not tap into the imbalance. But what happened? Now they have broken out of Asia. Can you see that?
Yep.
Took out the Asian highs. Okay, took out the Asian highs, and timing is perfect. Now the London keel zone is about to open at 12:30. Okay, and now they're coming down.
Yep. And the break.
And the break. Stop hunt, breakout structure with time and price. London keel zone has opened. Not the session, the London keel zone has opened. Okay, so then this turns into a strong high. Okay, strong high, because why? Asian high is taken out and a breakout structure. How do we know the strong high has created the low? You have to get a breakout structure, right?
Yep.
Okay, and here we have the break. See that?
And yep.
Yeah, right here. Lower highs, lower lows, and then comes the break. So this is your trade in range. So if you remember that previous setup, if this is the trade in range, what's this? Internal range liquidity.
Yeah.
Yeah, see that? That's the inducement. Sell above that, right above that, you had an imbalance. Okay,
those hedges
stop loss,
usually are going to be very, usually on M5, M2, M1, right? Those little hedges.
Yeah, exactly. You can't get it from a higher time frame.
Yeah.
Okay. Yeah. Okay. So now I'm holding it until here, and I'm expecting the Asian lows to get taken out by 1:30 p.m. my time. Look at that. Okay, 1:30 p.m. because why? That is when the London opens. Okay, that is when London opens. So I'm expecting London open to take out the Asian lows. Okay, time and price.
Yeah. At that moment, basically, because I do know that after Asia, Frankfurt, opens. So that is like Frankfurt, right?
Opens. Now this is Frankfurt. Okay, London keel zone is the Frankfurt. Okay, because Asia ends at the New York midnight time. Okay, the New York midnight time. That is when Asia ends, and then after Asia, we have 2 hours until Frankfurt opens. Okay, we have 2 hours until Frankfurt Open. So I would only trade if my setup is during Frankfurt or London Open.
Mhm.
Okay, not before that, not before that, not during Asia, not before Frankfurt Opens. Okay, I'll always wait for that. So see, that's why I told you 12:30. That is when the kill zone open. That is when Frankfurt Open.
Mhm.
Okay, so now it's a good time for me to take a trade. Okay, because now this has formed the setup. I don't know what session this is, but this has formed the setup. But now kill zone is reaching. Now the kill zone is here. Okay, so let's wait. All right, look at that. Just a little tap, and then comes the drop. Okay, then comes the drop. Now look at this. Now London is about to open, and look at these fake moves now.
Yeah.
Look at the fake moves. Okay,
Strong
imagine,
move.
yeah, how many people would have thought now it's going to be bearish. London is going to be bearish.
It's gonna drop.
Yeah, sell it, sell it, sell it. Okay, and why would anyone buy here? Do not catch a falling knife. Do not catch a falling knife. But look how perfect time and price is. 1:30 p.m. It reached this. Now what you could do is buy it. Now I'm risking the whole profit on this. Okay, whole profit on this. And then now the thing is now, yeah, like you said, this was not based on a higher time frame, right? You can't do that. It was a hedge. Okay, so since it's not from a higher time frame, you can't hold it up to 1 to 100s, 1 to 50, so anything like that. But where is this coming from? 4 hour. So what you can do is higher time frame targets. Look at all of this.
Yeah.
Equal highs. I'm sorry, trend lines, equal highs, high time frames. Okay. So if you are doing that, what you can do is high time frame targets. Yeah, see that? High time frame targets. And look how perfect time and price is. Yeah. 2 minutes after London opened, here we have the tap into the point of interest.
Yep.
Okay. Yeah, tap into the point of interest, the fake move, the Judas swing, the false run in the opposite direction. Okay, inducing traders to go short, and then comes the move. Now it's starting to go up. Okay, now it's starting to go up. So let's see. Okay, yeah, targets hit. See that? Equal highs taken out. Okay, equal highs taken out. Now, if you go to the 4 hour, keep in mind we are still bearish. Okay, this was just a short-term buy because your trading range was from here to here. How do you confirm that? We had a breakout structure here. See that? So then what's your trading range now from here to here, right?
Yep.
So what I was waiting for is to this internal range liquidity to get taken out and at least a tap into the equilibrium. Okay, at least a tap into the equilibrium. But what happened? They started melting.
Yeah.
So I missed it. Yeah, I missed it. So can't help it. Okay, can't help it. Now I have to stick to my rules, right? No trade is better than losing a trade. Okay, so I had to stick to my rules, and then I missed the sell. I missed the sell that I didn't even bother to see where it sold from because I don't care because it sold from a discounted price. Okay, so I don't care. I don't care. Okay,
They
so
basically
then
just took that internal range and just sold off from there.
Yeah, I just took out the internal range and then it sold. That's it. Because if liquidity is what drives the market, where is the liquidity for price to get into these areas? See that?
Yeah.
Now, I wish I could have thought of it earlier, but no. Okay, they just took the internal range. Never like because the equilibrium level was so close, I was expecting at least a tap into the equilibrium.
Yeah.
Okay, but see how close it was. At least a tap into this area, but never did. Okay, it just dropped. Okay, yeah, can't help it. So it has taken out liquidity and it has given you a breakout structure. Okay, so this becomes a strong high.
Yeah.
Okay, this will turn into a strong high, and then now price is melting. Okay, price is melting because look at that, no chance of re-entry. Okay, it just keeps on melting. Even if you go to a lower time frame, it just keeps melting. Where have you? Where could you take a re-entry now? Nowhere, right? It just keeps on melting. Okay, it just keeps on melting. So then, let's see. Now you can see that, right? Starting from this day, very consistently we took the same setup. We took the same setup. Okay, London, Asia, and that's it. Even during New York, the same thing was what happened. Okay, you saw that, right? That's why I told you it's a very consistent setup, not just a breakout structure thing, not just a breakout structure RTO, not that. Okay, it was a very consistent high probable setup. We have time and price, structure, liquidity, and everything combined into it. Okay, not just a breakout structure and a return to origin. That's why I told you it's a very consistent setup.
And the correct inducement, the correct liquidity.
Yeah, okay, the inducement. Okay, that's the main thing. So let's wait. Let's delete this. It's played out. Okay. Now, wait for Asia to end. Hunt for the setup. Asia starts right here. Okay, let's wait for Asia to end. Okay. Now this day, I think it was I think it was this day. I missed a beautiful sell. Yeah, it was this day. Okay, look at this. Now, no higher time frame trading range was clear. See that? Not on the 1 hour, not on the 30-minute, not on the 15-minute, nothing. No trading range was clear. Okay, nothing was clear. So on the 1 minute, yeah, once again, we can't go there. Right above the Asian highs, we had a point of interest right here on the 1 minute.
Yep.
Okay, on the 1 minute, we had one. And then what I did was I actually I even posted it in the channel. I set my sell limit here. Sell limit here, 2 pip stop loss, I guess. Okay, stop loss above that high. Okay, but then again, no higher time frame point of interest right now. Price might still go up and then clear this out and this out and might tap into this 1 hour hidden base kind of thing. See that?
Yeah.
Price might tap into that. Okay, who knows? Who knows? Because it was just a 1 minute point of interest. Who can trust the 1 minute point of interest? Okay,
Yeah.
so I had it, and then when London kill zone opened, I just deleted it. Okay, because I did not want to risk my money. But then look at that. Look at the timing. Okay,
Yeah.
15 minutes after London open. I'm sorry, before London open, it tapped into my point of interest. Okay, it tapped into my point of interest and melted.
What
Okay,
I
so yeah,
don't, what I
yeah.
don't see like that clear, like right there, at least because it was like an M1 thing, would have been
Yeah.
like the real break of structure, right? Because it was like
Yeah,
very,
that's the thing. Now I was waiting for this high to get taken out, because why? This, even though now on a lower time frame, it did take out some liquidity, but never
Yeah.
broke structure.
yeah,
Never broke structure. So why would you expect it to hold?
Yeah.
Okay, but yeah, they do whatever they want to do. They just hold off. Okay, so yeah, I don't know. I don't care. Okay, they just hold off because no fear missing out, right? Okay, we don't
Yeah.
care. There are
Yeah.
always setups in the market. Okay, so yeah. Then I was waiting. Now we are in a buy zone, because if price just melts, it just goes. That's it. But if
Yeah.
you get a confirmation, then you can buy it. Okay, then you can buy it. But what happened was this. Okay, so I was on the 5 minute. Now price is coming here. No confirmation yet. See that? Nothing yet.
Yeah.
Okay, see, nothing yet, nothing yet. No breakout structure even here. Okay, so I like, honestly, I was expecting this low to get taken off, because see how far they came.
Yeah.
Okay, but
Very
then
low.
yeah, here we had a stop hunt and then a break. Okay, here we have the setup formed. See that?
Yeah.
Here we have the strong low form. Okay, so yeah, why not risk my money on this? Because it's coming from the 4 hour. Stop hunt and a breakout structure. But unfortunately, okay, unfortunately, NFP comes in another 2 hours time at 6 p.m.
Yeah.
NFP comes. Okay, so you know how wild the spreads go, right, during NFP. Okay,
Yeah.
it's crazy. It's crazy. So now I was looking for the setup. Okay, so price was coming up. Yeah, it was going up. And here we have the inducement formed and all of that. So NFP comes at 6 p.m. my time. Okay, all of this liquidity was getting built up for NFP. Like, I knew what's going to happen. I know the internal range is going to get cleared into this, into this very clear setup. Same stuff, right? Same stuff.
Yep.
Very consistently, we have the same stuff. Now I'll have to refresh this shit. Give me a second.
No problem.
Yeah.
Now, at that moment, especially,
Yeah.
why did you had selected like the body and not the wick of the one of the candle that took the liquidity?
Okay, let's see. Let's see. Where were we? Where were we? Oh, we were here. Okay, right here. Yeah, what was your question? Why did I choose the wick?
The body. You're taking like the body.
Why did I use the body? Yeah, it's like this, because what did I tell you? Lower time frame trade in range, higher time frame point of interest, right? Higher time frame point of interest. So on the 15 minute, what did we have? The wick that cleared out the liquidity.
No, yeah. I get that, but
Okay,
when you go to the when you go to the M5,
yeah,
that
see that?
okay, that bearish candle, okay, that bearish candle, which is the one that took the liquidity, right? That one had a little wick right there. In this one, we have a little bit of an imbalance up there.
Yeah, up here.
Yeah,
but yeah, that's why I told you. That's the reason why I told you. Look for the higher time frame point of interest. Okay, because the 15 minute point of interest, the rejection block is up here, right? So when you refine that, when you refine that, that gives you the 5 minute body. So then why would you use the imbalance anymore?
Yeah,
see that? The higher time frames, higher time frames. Okay, stick to the higher time frames. That is what matters. And then see, now I knew what's going to happen right away. Okay, NFP is going to clear this out into the strong low. Okay, we know that. Yeah, just as expected, and here we have that.
Yeah.
Okay, so yeah, now like I was thinking now, like I wanted to buy here, but the spreads were too high. So if I bought it here, my stop loss will be below that, and that's 18 pips.
Yeah.
I don't want that. Okay, I don't want that. Then yeah, I thought shit, and then let it go. That's it. Okay, yeah, I was waiting for the next day. So then price started going up. Okay, it started going up. So even NFP created a strong low, stop hunt, breakout structure. See
Yeah.
that? You could even use from this low or from this low, no problem. Okay, you can use both of them. You had a breakout structure. So let's say we mark this out. Okay, let's say we marked it out. Let's wait for the high to form. How do we know the high is formed? Here we have the break.
Right there.
See that? Yeah, same stuff. What
Yeah.
are we going to do? Wait for Asia to end. Look for the setup. Okay, now this day, yeah, let us mark out Asia first. Okay. Now, you can use this as the trading range, right? From here to here.
Yeah.
If you use this as the trading range from here to here, where is Asia? In a premium price, right?
Yeah.
Then you know Asia is going to get taken out. So I told you, if you know Asian lows are going to get taken out, you always have a chance of hedging. I told that you, right?
Yeah.
You can always hedge now. Now you can look for sells. Okay, now you can look for sales. But before that, let's see. Now this was the higher time, this was the lower time frame trading range, higher time frame point of interest. Okay, so inside of that trading range, you have the body never mitigated. See that? Last push up before the push down. I'm sorry, the last push down before the push up on the 4 hour. The body has never been tested yet. Can you understand that? Yeah.
Yep.
Okay. And then let's go to a lower time frame and see if we would like. I don't think we would need to refine it because that's only 5 pips. Okay, so yeah, there no refinements are required, but let's see. 4 hour order block, 15-minute breaker block. Okay, so yeah, there was something, the smart money was up to something in that area, right? Okay, now if you go to the 5 minute, you can see, okay, 4 hour order block, 15-minute breaker block, 5-minute breaker block, and the 5-minute order block, all in the same place. Some smart money fuckery. Okay, yeah, and then
The little
internal
inducement
range
right there.
liquidity, yeah, being fed into that. See that? Being fed into that. So let's expect London Open to come here. But then again, I told you, right? My favorite setup, you can always hedge it. You can always hedge it, but safely. Now, can you expect the Asian highs to hold? Yeah, of course. Stop hunt, minor break right here.
And the big break.
Yeah, and the major break right here. So we can mark that out as a trading range, this high. How do we know this high has created the low? First, it has to break below this. Okay, done. And then it has to break a swing high.
Yeah.
Done. Okay, so we have this as the trading range. So if this is the trading range, what's this? Internal range liquidity. Yeah, inducement. Okay, so let's expect price to do that by the London kill zone. See, time and price. We can play along with them itself. Okay, London kill zone at 12:30. Stop loss goes above that high, and you're targeting the Asian lows. Or else you can target this, but if you are really unsure if they're coming here or not, you can just take off everything here. Okay, that's it. So let's wait and look how perfectly the setup forms right at that time. Look at that. Okay, look how perfectly the setup forms. And then, bam, look at that.
Yeah.
Taps and they're melting. And then they are melting. Okay, so let's see. They're coming down. Look at the drop. Look at the drop.
Amazing.
Okay, yeah, now I told you, right? You don't want to catch a falling knife. Who would want to do this? Same setup. Same setup once again. Okay, showing people that London is going to be bearish. Okay, because who would want to buy this thing when it's coming down with this high momentum? 40 pips in 40 pips in 1 hour, less than 1 hour. Okay, then what are we going to do? We know their intentions. Tapped into this, we're going to buy it. Stop loss goes below this, 4.7 pips, and you're targeting the external range liquidity.
Yeah.
Okay, external range liquidity. Now, see how beautiful this setup is. Okay, this and this, same setup.
Yep.
Same setup. Okay, because it keeps on happening the same way. Okay, same thing happens in different ways. That's the thing. And then what can you expect? Okay, yeah, like ICT says, as above, so below. Okay, what happened? Oh, the same way it dropped is starting to shoot up.
Yeah.
Okay, and this was a Monday. That's the best thing. If you had both of this, if you risked 1% on both of this,
You're done.
okay, that's 31%. Okay, you're done for the whole month. Okay, yeah, and then it started going up, and
Quick question, Eudora,
Yeah,
on
yeah, yeah.
on that area that we were buying,
Okay.
that we had the M15 breaker, the M5 auto
Yeah,
block, and the H4
yeah.
auto block. Could have maybe chosen, or would you have maybe chosen a lower area instead of maybe that one? Because
Low
the
area.
NFP week is very
Yeah.
big, right?
Yeah.
And
Now
we
the thing
actually
is
have,
now,
yeah,
yeah, the reason why I would look at this is because now it's a 4-hour point of interest. Okay. Once again, the higher time frames. And yeah, yeah, what you said was okay. Okay. NFP week was too big, but what did it do? It did a stop hunt, but it broke structure, right?
yeah,
It
yeah.
did a stop hunt and then it broke structure. Okay, it like the wicks that only does a stop hunt, those will get taken out. But this did a stop hunt and then broke structure too. Okay, and for extra confluence, we even had the 4-hour order block right here. That is
I
why
was
I'm not expecting it to go lower than this.
I was
Can you understand
asking,
that? Yeah.
yeah. The setup is completely clear. I was just asking
Okay.
because we had, well, you cannot see my mouse, I believe, and I don't have any.
I think you can annotate it.
Let me see. Yeah, right
Yeah.
here. It's
Yeah.
because we have. I would have seen maybe this as a possible inducement, and maybe trying to fill this, area.
No,
So
yeah, I can't see your drawing yet. Okay. No, yeah,
me
yeah.
too.
What's that?
So can you see a drawing right there?
Yeah, yeah, I can see it. Yeah.
So I would have seen maybe, let me erase it. I would have seen maybe this as a little inducement, and maybe I would have maybe tried to, seen any of these areas right here trying to maybe get filled. So I wouldn't, at that moment, I wouldn't have been completely secure about which area, understanding that, yeah, we had the higher time from H4, the M15
H4.
breaker, the M5, but I would have
Yeah.
seen this maybe as a possible inducement to maybe,
Inducement.
yeah, that's the question basically that I would
Oh,
have.
yeah, that's the thing. Okay, that's the thing. So once again, it's the same answer that I'll give you. That's the reason why I tell you to stick to the high time frames.
Mhm.
Okay, stick to the high time frame, because when the 4-hour order block is here and
Yeah.
when there is nothing below that, why would you still expect price to go lower? That's
Yeah.
the thing. Okay, and this is even a high probable point of interest. Look at this
Yeah, yeah.
liquidity being fed into that. And
Yeah,
I told
mostly
you,
because of that. Yes, yes,
yeah,
yes.
and if it reaches during London Open, see
Yeah,
that?
yeah, yeah.
London Open.
Perfect, perfect,
See
perfect,
that?
perfect.
Okay, all of the confluences, like I'm not pulling anything out of my ass or anything. All of them we are using the same confluences for every single trade. That's the thing. Okay, yeah. So we had this breakout structure right here, and yeah, in that previous setup, I told you, since this is coming from the lower time frame, you can't hold it to this 1 to 50 so anything. But where is this coming from? High time frame, right? High time frame. So once again, higher time frame targets. Okay, higher time frame targets. So then what's your trading range from here to here?
At least the
How do we
equilibrium.
know that? Yeah, at least the equilibrium. Because see, once again, there is no internal range liquidity. So it can do the same thing that they did here. We don't know. Okay, yeah. After we got this break, you can confirm your range from here to here. So we have this. Now, since we have already paid ourselves from this external range liquidity on the 15-minute time frame, you can just hold it into the equilibrium. No problem with that. Okay, no problem, because even if it does not go there, you don't care because you have paid yourself. That's it. Okay. Yeah. Now, what's the trick I told you? Lower time frame trading range, higher time frame point of interest. Okay. So what did we have on the daily?
That one, the big one.
An order block. Yeah. Okay. A very big order block. So go to a lower time frame, refine it. Here we have the breaker.
Yep.
Yeah. So we have the breaker right here. So you
That's
can even
above the equilibrium. Everything is
into the
above the
breaker. Yeah,
lining.
above the equilibrium. Okay, above the equilibrium. See that? Okay.
Yeah.
And yeah, if you use the ICT levels, I think it was a 70.5% retracement. Yeah, exactly. Let's use that. Let's see. Yeah, I don't use them normally, but yeah, it's always good for extra confluence.
Yeah.
Yeah, look at that. Okay, lining up with that level. So you could have used that, yeah, but I did not. But okay, until price gets there. Now we're not swing traders, right? We're gonna wait, like we're not gonna wait until price gets there. Okay, we're gonna always hedge our positions. Okay, let's see how we could do that. So now price is going up. You had no chance of re-entering actually. It just started going up. And oh, it ran into Asia.
Yep.
Yeah, it ran into Asia. So let's see how we can. Yeah, I did not take this. I did not take anything here. I took the sell here, but let's see if we could hedge it now. Yeah, now it's like back testing for me. Let's see. Okay, Asia. Let's go to a lower time frame because the higher time frame ranges are not clear. Okay, what has Asia done? Asia, yeah, did we break this?
Grab a
Okay,
little
yes,
bit
we
of
did.
liquidity.
Yeah,
And
yeah,
broke.
it grabbed liquidity, broke structure. Yeah, so we could use this as the trading range from here,
In the inducement right there.
yeah, to here. You could use it that way. Oh, but then again, let's look at this midline.
Yeah, 50%.
Okay, so lining up with that level, we have a strong low.
Mhm.
Okay, let's see. Yeah, but then again, this will be risky because this might be
Yeah.
internal range liquidity. Okay, yeah,
Yeah,
but
yeah,
let's
yeah.
see. Yeah, let's see. Let's just have this order block marked out because we have a stop hunt. Okay, let's see what price is doing. Okay. Oh, this looks interesting.
A little bit of kind of inducement right there, right?
Oh, yeah, equal lows.
Yeah.
Okay, I told you, right? Pay attention to how price is pulling back towards your point of interest. So right above the Asian midline, they're starting to build up some liquidity. So let's set a limit on the Asian midline. Yeah, if it's a loss, let's take it. Let's accept it. Stop loss below the strong low.
Mhm.
Let's target this. So that's a 1 to 7. Okay, but yeah, if it gets taken out, let's see. Yeah, it has filled the imbalance. Yeah, that's pretty much what we have. Let's see. No, yeah, we got the reaction. Ah, bam! Here we have the trade.
There we go.
Here we. Okay, so yeah, that was a good trade. Okay, that was a good trade. So what you could do is take your partials, leave around. Now, I did not take the buy. Okay, honestly, I did not take the buy. I just wanted to see what happened. Okay, so yeah, we could
That's
have
the
done that.
perfect
We
one,
could have
right?
done. Yeah, it was perfect. Okay, we could have done that. Okay, so yeah, I did not. So you see how we use the Asian midline stuff, right? It's very powerful.
Yeah.
These levels are very powerful. Okay.
That one, we could say that that one is able to be used if we see that on the lower time frame. Let's say M2, M3, M5. We see the
Yeah,
same
no
setup
problem.
like that one, right?
Yes, no problem with that. Okay, you could use it. And look at this. Okay, look at what happened here. What did price do?
Yeah.
A false break of structure. See that? Imagine
Yeah.
how many people would have wanted to buy from these areas.
Yeah.
Then swept, and then comes the drop. Then comes the push to the upside. See that? Yeah, let me refresh this. You see that, right? Pay attention
Yeah.
to those tiny details. Okay, all of these fake castings.
That is why lower time frames sometimes they're gonna be very messy because on the lower
It's
time frame was
very
the
messy.
box. On the
Yeah.
on another one was
That's the
just
thing.
little grab. Yes.
That's the thing. Lower time frames are always messy. Okay, it's always messy. Now imagine how many people would have taken this as a breakout structure. Okay, and they will want to buy from these areas, right? No idea what's going on. Okay, a lot of liquidity is getting built up. I'm sorry, built below, right? Like that. Look at the reactions, getting you all hyped up, and then bam.
Yeah.
Then it comes here, and then comes the right move, shooting up. Okay, shooting up. So yeah, that was a good buy if you had it. I did not. So let's see. Okay, now price is going up into the point of interest. Now, what's the confirmation you need? This, right? This
Yep.
is what we want to see. Okay, so here we have that. We have a stop hunt, and we have a breakout structure. So a stop hunt and a breakout structure makes this a strong high. Okay, makes that a strong high. So I was on the 1 minute. Once again, we can't go there. Yeah, so we have the strong high.
What session is
Here.
that for you? Like
Yeah.
London, yeah, right? That session is still
Yeah, now
London.
this
about to
right
get-
here, now this is the London lunch actually. This is
Yeah.
London lunch. Okay, this is London lunch. So let's wait and see. Okay, yeah. Now this is what I saw. Liquidity is getting built up. See that? Equal highs. Okay, now this becomes a little tricky because why? If we use this as the trading range, now I know we do not have a breakout structure. In the previous examples, we would have waited for this to get taken out and tap into this imbalance, right?
Yeah.
That's the setup that we would have used. But then again, I told you, pay attention to how price is pulling back towards your point of interest. So right below this, they have started building up some liquidity. See that? You have to pay attention to the tiny details. So this becomes high probable now, right?
Yeah.
This becomes high probable, but I can't now, like I said, if you're risking 1% on every setup, you can't risk 1% here. Okay, because why? If you put your stop loss above this, you might, there's a lot of chance of you getting stopped out.
Yeah.
Okay, you'll get stopped out, but keep in mind the safe place for your stop loss is always above the strong high. If you have your stop loss above the strong high and then risk 1%, yeah, no problem. You're always safe, but you might have to stay in a little drawdown.
Yeah.
Okay, so we don't like that, right? We're not used to that now. Okay, so what I would do is I'll have it here, and since I risk $100 on every setup, I'm not going to risk $100 on this. Okay, I'll risk only around $70 or $60 or something like that. So I actually used the 2 standard here. Okay, a 2 standard, and then price tapped into that and gave good reactions. And then the New York kill zone opened. Then we had a breakout structure. And then I thought to myself, now I just used the 2 standard. So is there any point for me to take partials from any of these areas? No use, right? Because it's just 2 standard. If I remove 1 standard, okay, how much is that?
It's not worth it. Yeah.
That's the thing. It's not worth it, right? It's not worth it. But since it's coming from the higher time frame, once again, higher time frame targets. Like this.
I'm gonna let it ride. That's what.
Yeah, that's the thing. Okay, now I don't care. I don't care if it comes here or not. It's not worth it. It's just not worth it. Okay, like you won't pay yourself enough if you do that. Okay, so yeah, then I thought to myself, I'm not gonna take out anything. I'll wait until price gets here. That's it.
Yeah.
Okay, that's my final decision. So let's wait and see. And here comes the drop. Okay, and yeah, even this day I was waiting for the Asian highs to get cleared out, but see how they left this equal highs kind of thing behind, and then they dropped. So yeah, done. And then
Easy.
yeah, the storyline is completed. Look at this. Daily to daily, the storyline is completed. We started with this, and here we have all of the trades. Okay, so you see how consistent we are, right? Okay, well, like for one trade, I'm not using one setup. For the other one, I'm not using another setup. No,
That's
consistently we use the same setups. Yeah, same setups. Okay, same setups. And now even this thing right here. Okay, look where this came from. Even this tiny little buy. Okay, even this tiny little buy. Okay, let's see. Now it has to come from an equilibrium price, right? I'm sorry, it has to come from a discounted price. Now, yeah, of course, a discounted price of this price level.
From there to there, yeah.
Okay, yeah, now it was a discounted price. Okay, but I'm pretty sure. Let's see.
That's a print.
Yeah, look at that. Where did the buy come from? Where did the buy come from?
Yeah.
Right below the equilibrium. That's why I told you. Okay, yeah, we would have added this into the buy too. I forgot to see that. But yeah, you saw that, right? It came from the
just below.
Yeah, extra confluence. Asian midline, 50% of the equilibrium, all of that in the same place. Strong buys. See that? We would have added this. Yeah. Because I have seen this setup. I think I'll show you. It was a recent setup, I guess. But yeah, now you see that, right? Now, daily to daily, the storyline is completed. See that?
Yeah.
Easily. Okay, market structure and liquidity. Okay, now look at this pure market structure. Lower highs, lower lows, lower highs, lower lows, lower highs. See that?
Yeah.
Okay, easily it's just dropping. Okay, it's just dropping. And yeah, now this sell is still in profits. I have a 0.5 stand. Yeah, a 0.5 lot size running from here. Yeah, maximize your profits always, because why not? Look at that. See that? Well, that's the 1 to 322.
Yeah.
That's crazy. Okay, I even had
After the call, I want to go maybe later on today. I want to go and start looking at GU for today. But what from today, from this recent week's action, I haven't seen GU. So from this week's recent price action, what are you expecting? It's gonna go higher, right?
EU or GU?
GU.
Yeah, GU is gonna go higher. GU for sure, it's gonna go higher. Like this high will get taken off for sure.
Yeah.
Okay, and then you have some reaction points in these areas. See, because these areas have never been tapped into yet.
Yeah.
Yeah, see that? Now this was SNR liquidity. Look at all of this. Okay, SNR liquidity. And I think it was on the weekly we had an imbalance here. See?
Yeah, right there.
You had this imbalance, and you had this order block. All of these will be areas where you could expect reactions from.
Yeah.
Okay, and yeah, you have all of this liquidity being fed into those areas. Can you see that?
Yeah.
Even
kind of equal highs, right?
Yeah, kind of equal highs. All of this liquidity, see?
Yeah.
Okay, all of this stuff is being fed into this area, and we have a lick. Yeah, I'm sorry, we have a wick that has done a stop hunt over here, lining up with the weekly imbalance. So let's see if you could refine it any further. Yeah, here we have it. I think we could use these levels.
Right there.
Yeah, right here, we on the 5 minute. Yeah, we could go to the 1 minute. Oh, here we have this. You can do something like this. Very risky, okay, but you could do it.
Yeah.
You could do it. Liquidity resting right below that, so you could do it right away. Okay, you could do it right away. That, see that? Okay, so we had some beautiful trades. You saw that, right? From here to here, some beautiful trades. Okay, some beautiful trades. It's all about knowing your higher time frame direction. Like it's the same examples that I drew at the beginning of the session. You saw that, right? The same way. The same way. That is how we traded it. Okay, like I did not use one thing for one setup and another thing for another setup. No, the same thing. Okay, same thing now. Like, yeah, can you understand this stuff? Yeah, is it clear?
Yeah.
Is it clear?
Perfect,
okay?
perfect.
Yeah. Now let me show you now. Yeah, let me show you now some more examples. Yeah, this I did a breakdown of this. You would have seen that. But yeah, we had Asia. Okay, we had Asia, and right above Asia, what did we have? Nothing on the 4 hour. On the 1 hour, nothing. 30 minute, nothing. 15 minute, we had a rejection block. Can you see the wick?
Yeah.
Never been mitigated. So I was expecting London Open to tap into that, but London never did. So what did New York do? Came up, swept the London highs, and here comes the drop. See that? Okay, now Asia, London failed, New York dropped. Okay.
That rejection block, can you maybe explain me that? That's the only one that I've never seen or basically understood, because I haven't seen it really. I haven't studied that one. I do understand the breaker and the normal order block. But
this is something like this, yeah. Now the rejection block. Now ICT tells you something else about a rejection block, but I don't know if you call it a rejection block, but I call wicks like this a rejection block, a wick that has done a stop hunt. Okay, a wick that has done a stop hunt, not these long ass wicks like I told you. Okay, not wicks like this, not wicks like this. Okay, the ones like this. Okay, like see how beautiful that wick is. Like this. Okay,
just to
it has to, it has to be higher than the previous candle. Keep that in mind too. Okay, it has to be higher than the previous candle. Okay, so then you can call it, according to me. Okay, according to me, then you can call it something like a rejection block, and here comes the drop. Okay, now let me show you some good setups based on that wick only. Okay, because that's something you should really keep to yourself. Okay, that's crazy. Okay, that's crazy. You can just trade from that wick to wick, honestly. I'll show you. So you have Asia, right above Asia. What do you have? 15-minute imbalance. See that? Right above Asia, London Open, and then comes the drop. See that? You could have just traded it. You could have just easily traded it. And then once again, Asia, and right above Asia, we had the wick that took out the previous day's Asian high, never been tapped yet. See that? Never been tapped yet. Can you see that?
Yeah, okay. There's a little space right there.
Yeah, the little space. Even these could be used as inducements. Now, look at this. If you use it this way, no one would ever know what was your POI.
Yeah.
See that? Like, impossible, right? Why would you look for a POI at these random wicks? Okay, but what happened? London opened, tapped, and then it drops.
Yeah.
See that? Now, you can, if you do the back testing, you can just play along only with the wicks. Okay, look at this. So after this, now see this, you don't have to go into lower time frames. Okay, you had a break, body of the 15-minute candle, tapped, and it drops. Okay, so now where is the money? On the wick. Okay, tapped, and it drops. Then where is the money? On the wick, tapped, and it drops. See that? You can just play along with that. Okay, so you'll have to do a lot of back testing with that. Okay,
of course, yeah.
That's some crazy stuff. Okay, no one will ever tell you that. Okay, even if they know, they will not tell you that. That's the thing. Now, most people, just to look at order flow, they will go into lower time frames. They'll see on the 1 minute. Okay, they'll go to the 1 minute and they see, okay, now if this has not tapped into this, this has not tapped into this, then they will get confused. Which one am I to use? Okay, but if you go to the higher time frame, you can see where the money is. See that?
Yeah,
okay, that's some additional stuff. You don't really want that. Okay, the precision is enough with the stuff I taught you earlier. That's enough. Okay, but if you really want to go deep into this, then do the back testing on the wicks. See how it
Yeah.
plays out. Okay, the wicks are crazy. Okay, like I think even this day. Okay, Asia wick higher than the previous wick. See that? London Open tapped and it drops.
A little
Keeps
bit
on
higher,
happening.
higher than it
Yeah,
should be higher than the previous candle. That's it.
yeah, it should be higher than the previous candle. Okay, yeah,
Mm.
now that's something that, like, honestly, that's something you should keep to yourself. Okay, it's some crazy stuff. That's
Very
really
good,
some
very
crazy stuff.
good.
Okay, you saw how that works, right?
That's
Okay, it
amazing.
works like crazy. Okay, so yeah, you could have just traded this whole thing. And this day we had news. This day we had some news. So what happened? London did not take out Asian highs. Okay, London did not take out Asian highs. All they did was from Asia to London, they were building up liquidity for the news. And right above Asia, where was that? Okay, right above Asia, what did we have? A wick.
Yeah, that one.
Yeah, okay, a wick. But if you go to a 15-minute, you can see the body of the candle has never been tested yet. And here comes NFP and then the drop.
Yeah.
Okay, and then comes the drop. Okay, so yeah, you could have just traded along with that. And yeah, let me show you some more setups. Yeah, this was the same thing. See, Asia, London Open goes up. Okay, it just goes up.
Can you
And
have,
yeah, let's
can you
I'm
go a
sorry?
little bit, can you go a little bit to the left? When you have like
Yeah,
those big movements that
wicks.
yeah, no, the one to the very, very left side
Oh,
currently.
this thing
Yeah.
right here.
Yeah, when we have
Okay.
like those kind of very big movements and price starts to get very, very like choppy, maybe because of low
Choppy.
volume or
Yeah, now the
getting
thing is
into
now,
December.
all
Do
of the
you like
liquidity
to?
has been cleared out with this.
Yeah.
Okay, that's the thing. And to do a drop like this, okay, they have used a lot of money in here, right?
Yep.
They have used a lot of money in here, which means, now look at this. First, they cleared out these highs.
Hmm.
Okay, first they cleared out these highs, then price dropped, went back up, dropped once again. So what's this area called? A mitigation block.
Hmm.
Okay, this is a mitigation block. So now, even to mitigate out of this position, now they would have placed a huge buy order from here. They're placing a huge buy order from here just to mitigate out of something here, and then they sell it heavily. Okay, so when it's falling, the buy that they had here is in a drawdown, right?
Yeah,
So
yeah.
that is why they slowly push up and then it drops once again. After mitigating out of that loss, they drop down once again, because if the money is really there, they will build the inducement right below that. Okay, look at this. SNR liquidity. SNR liquidity, lower time frame trend lines, a lot of money wicked above that, and then comes the drop. Okay, and then comes the drop. So see, we have this top hunt, breakout structure, strong high, price went up. This was London Open. London Open actually tapped into this because why? Asia was a strong low that time. Stop hunt, breakout structure, came back down to the Asian lows, went up, and this was New York, came back down, tapped into this imbalance. See that? Tapped into this imbalance, kept on falling. See that? Okay, so crazy stuff if you understand price action. Okay. And yeah, same thing. This was Asia, London Open went up. So now Asia has created the high of the day. London gave a retracement, dropped down. So this was Asia, same thing. London gave a retracement, dropped down. And yeah, see Asia, London kill zone. Look at that wick above that, and then it dropped. Okay, and then it dropped. And yeah, even this Asia, New York Open, then comes the drop. Okay, New York Open, then comes the drop. So yeah, that's why I told you, not only London is tradable, even New York is tradable. Okay, even New York. Like if you look at this thing right here, yeah, this was the trade I had last week. Okay, look at all of this. What's that? Trendline liquidity. Okay, trendline liquidity. Look to the left. What do you have? A wick. A wick. Never mitigated. Okay. And what happened? Now there was news during London Open, so it was the setup formed a little later, but yeah, it just formed. Look at that. No drawdown.
Yeah.
It just drops. Okay, yeah, perfect. I did have the sell. You would have seen that. Drops, it comes back down, clears this liquidity, and yeah, now it's going up. Okay, so yeah, this is how you could now. Even yesterday, let me show you what happened yesterday. Okay, now I had all of this marked out, and damn, I had my exams. So we had this top hunt, breakout structure,
That would have
and
been
you
like
have
like the let's see, internal, right? Internal break of structure.
yeah, no, internal breakout structure. Now look at this. Your trading range was from here to here.
Mm-hmm.
Okay, this was your trading range from here to here. Price came back down
Mm-hmm.
into a discounted price and then broke structure. See that? Broke structure. So then your trading range would have been from here to here. See that? Makes sense, right?
Yep,
From here
yep,
to here.
yep.
Then this came into a discounted price of this trading range and then gave you this break.
Mhm.
See that? Then
Yep.
gave you this break. And then inside of this internal structure, you have a strong low. Stop hunt, breakout structure. See that? That is what you always want to see. The stop hunt and the breakout structure, not just the break. Now look at this. This was just the breakout structure. Came back down. Did this take out any swing low? Can you see any swing low here? No. So can you use that as a structural point? No. That
Yep.
turns into internal range liquidity. Buy below the internal range liquidity. Stop loss below the strong low. Target your higher time frame trading range. Okay, let me refresh this. Target your higher time frame trading range. That was that. Now, yeah. Target your higher time frame trading range, and yeah, within within 30 minutes you're done.
Yeah, quickly.
That's it. Okay, yeah, very quickly you're done. And then what you could do is take your partials, leave a runner into the higher time frame, like this.
That
Okay,
was
so you can see this, right?
exactly what happened. Yeah.
Yeah, bam, like that. Okay, the same stuff I taught you, nothing else. Okay, nothing else. So see how many possibilities you have, right? So
Yeah.
much possibilities. All you have to do is understand market structure. Okay,
On that
understand
one,
structure. Yeah.
on that recent one that we were looking, go back to the, if you can go back to the
Okay. Yeah. Sure.
close, zoom it a little bit, that specific area, the
Yeah.
Asia part. Yeah. So we had a big break structure, and then what you said is that you saw a little bit, because I would have seen initially this, and I'm gonna maybe annotate right this. I would
Okay.
maybe have seen this as the inducement, but then because this took
Oh, this
this,
you could have taken as inducement. Yeah, you could. Yeah, that's perfect. That's
and it's
perfect.
valid,
Okay, no
right? It's
problem
valid,
with that.
right?
It's valid. It's valid if you take it as an inducement. Okay, but then again, time and price. London Open. See
Mhm.
that? London Open. Where is it coming into? Taking this liquidity into this, into
Yeah,
a strong low. See that?
Yeah, yeah.
Okay, pay attention to them. Okay, pay attention to them. So today, what happened? We had the stop hunt, breakout structure. Okay, yeah, today the setup formed a little too early. So this was the trading range from here to here.
Then we had the
High
same.
time frame. Yeah,
You
I was
wanted to
looking for
hedge
the,
that one, right?
yeah.
I just saw it. Yeah.
Yeah, so we have this. But the thing is timing. Okay, timing. Okay, now Asia has already been taken out. And then, yeah, this was my point of interest. Honestly, this was my point of interest. But then again, I missed the buy too. Okay, I missed the buy too. Then it started going up. Okay, then it started going up. So, yeah, now look how many possibilities you have. Okay, it
Can
just
I
goes
can
up.
I see can I see back again the point of interest? You were taking that from the H1
Yeah, sure.
candle,
It
right?
was from the H1. See that candle right here?
The body. Yeah, right there. Mhm.
Yeah, the body of the candle right here.
Mhm. Did it
Okay.
align with something extra on the M30, M5?
Yeah, that's what. Let's check. Let's check. I don't think so. No.
No, not
But
at all.
yeah, you could have used this as internal range liquidity, and you could have used this hidden base, but I didn't do that, so I'm not
Maybe
going to
that
show you
little
that I
order
did
block
that.
right there. Maybe that one, that
Yeah.
little order block,
This?
a little bit higher. No, that where exactly where you had the zone, like right here.
Oh, right here.
No, this one, right there, with a little bit of
Yes.
maybe inducement, and right here, I believe was the H1 zone that you had, which is
Ah,
where
yeah. Let's mark that out once again. Yeah, the H1 zone was right here. Okay,
Yeah.
so let's see. Lining up with that. Yeah, we had this thing right here. We had this thing right here, but
It
yeah,
actually
I
was
didn't use
taken, yeah.
that.
Mhm.
Yeah, I didn't use that. Okay, I didn't use that because see now it has done nothing. Okay,
Mhm.
it has also done nothing, but yeah, you can see that, right? Stacked lows. So you could have honestly used this hidden base on the 5-minute.
Yeah.
Okay, you could have used that, but I did not. Okay, I did not. So I'm not going to tell you I did. Okay, but yeah, you could have taken a re-entry
Right
during
here.
London Open. See, stop hunt,
Yeah. The break.
breakout structure. Okay, you had a little bit of inducement.
Mhm.
Yeah, a little bit of inducement, and then maybe this.
It was like
Okay.
kind of a M15, M30 maybe body, something like
Yeah,
that.
maybe. Let's see. Let's see. No, not on the M30. On the M50, no, you have the wick. You have a little wick right here.
Yeah.
Okay, so you could have taken it off that. And then it starts to shoot up. Okay,
Yeah.
and then it starts to shoot up. Okay, so you see that, right? It's the same stuff. Okay, same stuff. Now
Same
see,
stuff.
that's why I told you. If you have the proper trading range, you have your bias. You have the proper bias. Okay, now even for this buy, why are we confidently holding it? Because this was your trading range.
Yeah. Has to go high.
You know?
Yeah.
Yeah, it has to go higher now because this is the draw on liquidity. This is
Yeah.
the external range liquidity they are going for now. Okay, so you could have targeted that. Okay, see,
So
even
now
in
we
this
could
messy
we
price
could say
action, yeah,
now we could say that possibly well, I don't know how it's gonna move, but we could maybe be expecting, take that external, maybe kind of hedge it, sell it, and then maybe kind of buy it.
yeah, sure, you can do that. Okay, now you saw how we could hedge it, right, from the weekly points.
Yeah.
Okay, from the weekly points, you can always hedge it. Okay, you can hedge it from the weekly points, but if it taps into a weekly point, okay, make sure you do not close everything. If you take a sell from the weekly points, do not close everything, because since it's coming from the weekly, it can once again drop to the weekly times.
Yeah.
Okay, that's the thing. So make sure you do that. Okay, make sure you hold some volume if you're taking it from the weekly. But then again, if you're taking sells here, okay, these areas will always act as obstacles.
Yep.
Right? This area might act as obstacles.
That we could maybe hedge to buy to then
yeah,
sell
hedge
again.
to buy or anything. Okay, you can do anything, but then again, stay safe in the market because it's December and Christmas is coming and all that stuff is happening. Okay, so you'll have to always stay safe. Okay, trade safely. Okay, so yeah, is everything clear so far? Let me know.
Perfect. You there has been perfect.
Yeah, so you got something out of session, right? I hope you got some insights, new insights. Yeah.
Yeah, definitely was. I think the best one I've ever taken.
Thank you, bro. Yeah, no, that's why I told you. Okay, that's why I told you. Now, I'm not bragging about myself or anything, but I know there's no one out there that's trading this way. That's why I told you. That's why I told you I cannot send you a recording because it's not gonna be worth it. Now, you see how many times we communicated, right? That's why I told you. I had to ask you questions and all of that. Now, I could have just recorded the session for more than 3 hours long, but it's not gonna be efficient. That's why I told you we can't do it that way. Okay, I'll have to.
Was completely worth it.
Yeah, that's why I told you. I'll have to ask you questions. Okay, you'll have to tell me if it's not clear and all of that stuff. Or else, now I could have just recorded the session. Okay, I could have just recorded a session and sent it to you. Like then you'll be like, no, it does not make sense. It will not make sense. I know that. Yeah. I know that for a fact. That's why I told you now. It's not gonna be worth it. Then that's why I asked you. Like, it's okay. We could have done it on another day because I don't like that because I charged you money, right? So I have to do something genuine. Okay, because just sending you a recording, I could have done that. I could have asked from a previous guy to send me a recording and then I could have forwarded it to you. But no, it's not worth it. Okay, I'm just cheating.
Completely.
Yeah, I didn't want to do that. Okay, so yeah, now everything made sense, right? I hope everything is clear. Yeah.
More than enough, man. Thank you so much. Really appreciate it, man.
No problem, bro. And yeah, if you have any other questions, you can always hit me up. Okay, send me your charts and anything. Okay, as soon as I see the messages, I will reply. Okay.
Very good.
You can always hit me up if you have any other questions. So yeah, do you have any other doubts regarding this?
I'm just gonna maybe before we stop and we end up. But I'm gonna let me stop recording right